Check 1 2. Check 1 2. Mic check. Check 1 2. I am a little late this morning. I didn't even notice that. Well, happy Friday out there. How's everybody doing? Happy Friday out there. How's everybody doing out there? Let everybody pile in and get some good news this morning. Is the camera even on? I don't even know. Spy trying to fight back to the daily trigger right now. Good morning out there. How's everybody doing? Hope you're all doing well out there this morning. Welcome back. We had a bull trap this morning, right? And I think we pumped it up into about 4 or 5 this morning. Started bleeding out a little bit, and then their banks reported. I checked out some of the guidance this morning, and it was fascinating guidance being put out there. Bank reports are generally good. It was fascinating to hear the verbiage or wording from reports. Jaime Dimon this morning was interesting to listen to. What I took away from it was we're making a lot of money. We're making a lot of money. Profits are good. There's a couple other fascinating things in a backhanded fashion. He said to expect a great year, except for the end of the year, which makes sense. It lines up with what they said about GDP being booming for Q2 and Q3 of 2024. But he talked about down the road in Q4 that would be we'd see some negativity from the Fed operations, and he expressed 2 things. One was geopolitical risk, and the other one was Fed operations. Now, of course, what I took away from it was twofold. I took away the first part was banks are making a fucking killing. Leave us alone while we make a killing. We don't care about giving you. We're not going to pump guidance for you. Why? The why is because the banks want the Fed to go higher for longer, right? The banks make the most of their money from higher rates. Now, what they don't like is geopolitical risk. That's bad for banks. So they did highlight that. But it was fascinating to see the perspective of the guidance being given from these banks this morning. We'll go into a little bit more depth about that today. And what some of those reports were, but they were generally good, which they were expected. Now, that didn't help the market, and as a matter of fact, when they went up this morning, why is this thing right? Oh, apologize for that. Hold on. Hang tight. And I've got like one of those fancy mic arms. I don't know why it's like so aggressive here. It's not supposed to be like this. But I got to get the new arm. So the idea here being was the banks were up this morning. The market was down regardless of what the banks were doing. Banks sold off, but I think the banks come back. I think the banks are going to be just fine. They had the idea here is this, is you're getting the perspective, or you got good reports this morning in general from the banks. They're making money. They don't want to rock the boat with making that money. They most certainly are not going to come from the perspective of, hey, cut rates. That's their own, right? They want rates higher for longer. They make a lot of money that way. The geopolitical risk thing, though, I do believe they're concerned about. I'm not as concerned about the geopolitical risks out there. I could be wrong on this too, and I could honestly, I may not be as concerned as I probably should be. I'll be honest about that specifically, because I have asked other people, are you concerned about the geopolitical risks right now? Like when we get range expansion, it's part of that, that people are concerned about a few specific things. You've probably already read that Investopedia article. I've tried to jam it down your throat like 10 times. And normally why we get range expansion, how it begins is market participants do not like markets that go straight up, and they don't like markets that go straight down either. They don't feel like that they can participate. And they get angrier and angrier and angrier as that goes on. So if you think about from October until about March 21st, and of course aligning with the end of Q1, most market participants had enough. So they're like, you know what, fuck you. I haven't been able to get in on this run. I'm angry now because I'm missing the run. And I may have even bet against the run. And they've had it at this point. The quarter is over, right? Q1 is over. And they get louder and louder. Some of what they're saying is probably correct. Some of it, though, is unfounded. It's just, I'm scared to jump in, and, now I have all these reasons why it should crash. And this isn't like Investopedia wrote this stuff yesterday. This is just known. This is what happens, right? And so what they start off with in these expansion phases is number one, that the number one rule is they did not get to participate. But it also follows along with some specific things happening historically, and that is rate paths. It is also normally tied to elections, in which we have a major one coming up. Geopolitical risks, which there may be some right now. And so all these things are kind of tied in with each other and right where we are right now, right? So it's not abnormal to hear this stuff. And also, these banks, they want this. They don't want the geopolitical risks, but they want rates to stay higher for longer. They make more money that way. So you're not gonna get that out of them. So it's gonna be fascinating to listen for the rest of the week from the perspective of different companies and what their perspective is on the market right now. If their perspective is good, or if their guidance is bad, are they looking towards the GDP growth as positive or negative or not? I'm also interested to see what people's perspective is on rates right now. And we'll get into that. I meant to get to it yesterday and didn't have a chance to, but I want to get into it today if possible. If we have time, maybe towards the end of the day or something, to get into some of this stuff in more detail. Because there's also some trades going on. We knew about this in November, I think, or October. We had questioned, how do you create volatility in the market? How do you need to have pullbacks, some kind of pullbacks, and be able to discuss or bring volatility in the market. And you've seen that trade, like we're going to cut rates, we're not going to cut rates, we're going to cut rates. And as a matter of fact, yesterday, there's another new conversation, and that is we're going to get rate cuts in June, not past 2 days. Now, it hasn't snowballed yet. It's a very small discussion, but it's there. Started about 2 days ago, and then yesterday I saw maybe 20 articles. So it's like a script, right? You get the script, and they go, here you go. We're going to talk about no rate cuts, or we're going to talk about 6 or 7 rate cuts. That's the discussion we want you to have. So you discuss that shit, right? And we knew there were not going to be any rate cuts, but that didn't matter, did it? It didn't matter that we knew there wouldn't be any rate cuts. Everyone said there would be, and that trade took off. It took off for IWM. And it was a kick-ass trade. IWM was blasting, ramping, and then of course we get to rate cuts, and we find out we're not going to have them, so everybody sells, right? And I know a lot of you out there think to yourselves, well, we're not getting a rate cut, so that's why they're selling IWM, when in fact it's just a way to accumulate and distribute with a story, right? So you create a story. If you guys don't know about this stuff, I don't know that I particularly cared for this docudrama, but they did a fairly good job of simplifying this idea. It was about Bernie, what's his name? The fraudster from New York City, Bernie Madoff. I think it's on Netflix. They did I didn't even finish it. I was like, this is boring. It's kind of like, some of the stuff I already know. So I've read some books about it, so I'm like, whatever. But they did a really neat job on explaining Bernie Madoff. How he began was as a market maker, and so he would create stories. Market makers create stories. They create compassionate reasons why you should buy something that the market maker already owns for nothing, and then they sell into you with bad news too. So you see that playing out right now, right? We're going to get rate cuts, and then we're not getting any rate cuts, and then we are. And then right now, specifically, if you go to like Google News, type in rate cuts or something like that, they started ramping new stories about 2 days ago. And so you're probably going to see that conversation come into play or snowball in the next 2-3 weeks. And it's going to be fascinating to watch, right? And that's for the June rate cut. So they got to prime it all up right now. And it doesn't matter if we get a rate cut or not. Not really. It's just a matter of the trade, making money, accumulating in distribution and stuff like that. Now, you might be asking if we're going to get a rate cut or not in June or May or anything like that. And I can't tell you if we are or we are not. I want to say that my initial thesis was that if the Fed can make the public believe that they will, or that they are in control, right? If the market believes that the Fed is in control, and if the market will take some piecemeal from the Fed, if Chair Powell could say to you, look, I'm likely going to give you a rate cut in June. Do not expect another rate cut, and we will likely raise rates again. If you believed that, then the Fed could theoretically create artificial pullbacks in the marketplace and not crash it. Okay? You get what I'm saying there? Now, I don't know if they can do that right now at this point with the way the conversations have been heading, that he has that ability at this point. I think he had that credibility, but I think he may have lost it. And there's another factor here that I want to discuss, and that is the Fed adversarial or not? And they've repeated themselves even recently that they are not adversarial. Though this last shit with inflation, CPI, they seemed very adversarial. Lane Bernard, I think Andy Constant said something on Twitter that she had implied that CPI would come in line or close to in line, which it actually did. It actually did come close to in line. We're making improvements, and there's some people that have noted that as well. I'll see if I can bring those articles up for you. Tom Lee did say something about that, but there's also some other discussions going on about that as well. It's not only Tom Lee saying that, but the it seemed slightly adversarial to me. And then of course we've got Bostick as well. Now if you heard, some people were pushing that Bostick was hawkish, but if you actually listen to the interview, he was not hawkish. He was dovish. For him, he was very dovish. We, as a matter of fact, we listened to it here in the show, and that was that was a consensus. And Lane came off the same way, and I think even Jerome came off the same way too. So it's slightly adversarial, and then they have the O'Keefe thing that came out, right? The Veritas, who you can't trust. Let's just get that out of the way. They're crazy people, literally crazy people. Now, when I watched that video that O'Keefe put out, that video was highly edited, highly, like, it looked really bad. It didn't look good. It looked like cut out these 3 words and then paste them with these 4 words over here. Keep following me on this here before you go crazy out there, because I know you're going to be like, he's not fake and he's not this and he's not that. The video didn't look good. It looked like it was constructed. And then it also looked like the guy from the Fed was expressing his own opinion, which I've heard opinions like that, not specific to this, but I've heard people in different contexts and business communities where people will have their own interpretations of what is. We're not talking about something that wasn't there. Just one person has one interpretation, another person has another interpretation, and that kind of stuff. And that's okay. So I had no issue with that either. I was like, this guy's saying this stuff. But there was a message they were getting across about the Fed being political and politicizing an election, right? And electioneering, right? And so I know that the Fed has been upset, and Jerome Powell specifically has stated that he's not electioneering. And then you get the O'Keefe thing dropping, and I'm thinking to myself, well, now they're slightly adversarial. They probably knew about the O'Keefe thing coming out. Is all of this going to die? And it didn't. As a matter of fact, yesterday, McGlinlock from Nomura, right? Or McElliott, sorry, McElliott from Nomura yesterday stoked the flames on that whole thing around 2 in the afternoon. It was 3 in the afternoon yesterday. So there's a fight going on somewhere. There is a fight. And if you've got big talking heads coming out to address it, and they're not letting it die, right? Then there is an issue here of some kind. There's likely something that we don't know. This fight that's going on between people on whether, McElliott says, in further iteration of the Fed and Treasury inflation credibility destruction, Fed independence, market cynicism, and what has become an impossibly blurred line of policy with U.S. politics and electioneering. McElliott also said about President Biden went on tape after the CPI saying that there will be no B-rate cuts before year end. So hear that. Biden went on tape, right? Or he made a statement saying there will be cuts before year end, whether you like it or not. That cuts may only be delayed for a month. Later in the evening, conservative activists at Project Veritas released undercover videos on Instagram capturing a Fed employee, principal economist, saying that policy is intent to keep the risk of Trump out of the presidency. We, the Federal Reserve, don't want Trump to be in the government. He, quote, Powell is doing it for legacy. He wants to be remembered in history as someone who has held the line against the Trump, or like Trump. This murkiness on the Fed, premature policy pivot, Treasury, QRA twist, machinations blurring the lines with election politics at this very moment is massively complicating factor here, as many view it as pushing them into policy error territory. Hence the rates UST premium rebuild that the market has been voting with its feet on in recent weeks. Policymakers are also being perceived by market participants as being intellectually dishonest about neutral rate, are being objectively higher than they are acknowledging as exploding federal government deficits from U.S. political party agnostic economic populism due to willingness to take the pain of spending cuts or tax hikes. Woof. Greater investment demand from onshoring and energy transition, BBB, chips, plus upside risk to productivity growth, all of which should mean higher term premium equals higher risk of vol events from an accident or something breaking. That's a lot of words, right? You probably just listened to that and said, what the fuck did he just say? So there's something going on here in the background for sure. And some of this is created by that. Are we going to cut? Are we not going to cut? And so there's a little bit of control being lost, it looks like, out there right now. Okay, so let's switch over really quick. Let's go over to, we're not going to go to the market brief. We'll get into that in just a moment. We're going to go over to the opening bell and positioning. And so just right in here from yesterday, this was yesterday into the close, right? Came up in here. Closed the day out. Excuse me. This was Thursday, right? And then right here into Friday, this was the Friday open, and they immediately started to sell. If you are a supporter or pro trader, and I think on Twitter last night, I went on after I was done with the brief last night, I went on to Twitter and made a post and said, no matter what the bank earnings are this morning, there are sellers waiting to sell it on this morning. And sure enough, they did. So this was our high into the close, and they started selling this early this morning, right on the open. Ting just started selling it, right? So we started selling down into this morning, and now we are underneath the daily trigger. And we discussed this yesterday, right? We discussed yesterday a few important things that we told the bull. This was in the market brief last night. The bears need closure, right? You like step 1, step 2, step 3, step 4, step 5. They failed step 4 and 5 yesterday. And the bulls stepped 4 and 5 yesterday as well. But they had an opportunity with the reports in the overnight and the open this morning to squeeze this up higher. And as a matter of fact, the bulls in the overnight had the ability to push this up in futures. We were slightly in we were still in negative gamma, but not quite. So dealers aren't particularly supportive, but they're not particularly unsupportive either. So they didn't do that either. So the bulls didn't do that, did they? Didn't get it done. Didn't get it done in futures. You didn't see the head of the Fed come in yesterday and get it up there. The Janet Yellen, the Treasury Department, whoever. Doesn't matter who it is. You didn't see it this morning in the pre-market U.S. cash market, right? So the dealers aren't here in cash market helping you out. And then on the opening bell this morning, yeah, you get some support from dealers, but that's because of negative gamma, right? And they'll follow price wherever it goes. If price goes down, when we're in this gamma territory, if people start selling, if let's say it's selling in the market, right? Dealers would become supportive in positive gamma. They'd be buyers, so you could buy a dip for us to continue higher. They're not like that right now. When we're in this weird place with gamma, they will chase price. They will actually amplify down moves, and they'll amplify up moves in cash market for where we are in gamma right now. So the bears yesterday couldn't get it done, and the fucking bulls couldn't get it done yesterday into this morning. So what happens when you do that? We go down, right? And we're going down right now. So we're likely going to continue lower. I'm looking for a dip buy this morning at 508 for a move to 518. Now we're back into where we were yesterday. I know it sucks to say this. I know that, and I want to tell you something out there. I think I've made 2 or 3 posts on Twitter about this. I made a post last Friday. I made a post yesterday. And I've seen commentary from some traders that I respect. And I have lots of respect for. And they've mentioned the same thing. All of these inside days that we're getting, an indecision, doesn't make anyone happy, right? Everyone's chasing price. You got bears chasing price down, and they just want to blast through. You got bulls chasing price up, and they want to break above. And so no one's getting what they want. The only person that's winning is a Theta Bro, right? Theta Bros are loving this. They're so happy at this point. This whole entire week, past couple weeks, right? It's been going on for some time now. It actually started in March, and it hasn't really ended, has it? This whole zone here is this whole entire zone here has this whole thing. You see it right here. Started back in February 26th, and to that point, look at where price is right now. So price is, look where it is right now. That's price. So take a peek at this. No one's really won, have they? Right? You got some highs, you got some lows, and you really have no decision, do you? You really don't. You don't have like, hey, we're heading higher now. You don't have, yeah, we're blooding down. We have none of that, and we got none of this, do we? So, if you're at Theta Gang, you're excited. You're loving this. This is great. This is great price action for you. And even right now, this morning, like yesterday, let's take a look and see what we can see here. Just take a quick peek here. This is a 30-minute chart, by the way. But let's see. Let's have a quick peek here. Even if, and I hate having to do this to you because, we could literally, I can't believe I'm saying this right. We could literally blood this thing all the way down here, right? Slam down in there. Literally bounce straight back up here. And you would have had no cross. The hourly trigger go back up, price goes right back up and to the right. And you won't have the you don't have the hourly trigger cross, right? You got the prior low and the new low, but you still don't have the trigger cross. This would be good here for bears if you were to have the rejection up here. If you actually got the rejection off the hourly trigger, that would help a bear. That would be great. We could get started on a correction, right? That would be wonderful if that happened, but you still don't have the cross. You still don't have the prior low. And you don't even have it at the moment. Let's draw it out right now. Let's get closer. Let's go to a 1-minute chart and get closer. So I'm going to get rid of this yellow bar. There's the daily trigger. I'm going to get rid of this stuff so you can see more clearly, but get rid of all that over there. All right, so we'll set it up again. We have a prior low. hate doing this to you guys. We have a prior low, okay? We got a prior low. Sellers want to get a new low, okay? They also need the cross of the hourly trigger below the daily trigger. Your daily trigger is right here. Here's your hourly trigger. It's not good enough to get just the new low. It helps, but it's not all of it. And so you don't have it yet. So even if we blast down here, you want to see as a bear that when the price comes back up, that this hourly trigger is below the daily trigger. If we can get that, we'll start a correction. And we'll be looking for that today, if that's the case. So if you're a bear, I apologize, but you do not have confirmation of a correction yet. I know you want to hear that, but you don't. And it's just like the bulls yesterday. Bulls still had work to do. They're still not out of the clear. Made that very clear yesterday, even on Twitter. Like you did it here, so I apologize to say that too. So if you're a bear and you want doom and gloom, you have no confirmation of it yet, and you need that confirmation so that you can be comfortable, long or short. That you know that you can sell rips and be safe, or that you could buy dips and be safe if you were a bull. And that is just not the case at this moment. It's like a Puxatani Phil or something, or a Groundhog Day, right? I even posted a tweet on my handle yesterday that said today is April 28th, and I'm now on inside day number 20. It was a joke, of course, but it was an offhanded comment on what most participants are likely failing right about now. If I'm wrong on this, let me know. If you think I'm right or wrong on this, I mean, we're coming in here every day and we're all bulled up, we're all bared up. And today's Friday. So and for me personally, I got to tell you guys something. I've said this before. I'm going to say it again. Before we made the jump to make a sustainable community, I would take every 2 weeks off of every quarter, and I didn't care if we went straight up. I just took it off. I didn't want to deal with the horse trading of this thing. It starts like 2 weeks before. So at the end of a quarter, I don't put major trades on. I just try to wrap up my trading, clean up my accounts, that kind of stuff. Then the first 2 weeks, I just let the market do its thing. And I feel today, I got to be 100% honest with you, like I am worn out. These 2 weeks, I feel like I've been on a rodeo. Do any of you feel that? I feel like maybe you guys are. I mean, I thrive in this stuff, but I feel like I've worked hard and I've made money. I've made a lot of money the past 2 weeks, but the work involved in making that money has not been fun. It's been tiring. And along the way, having to avoid major minefields has been super stressful. At any moment, I feel like I'm going to get blown out. Now, I'm starting with small size, like 10 contracts, 20 contracts, but I do have some trades that I've put on that have been of size. And in those size trades, I'm scared. I'm not going to lie to you. Like, I'm scared, so I'm stressed out. And it's been a rodeo. And it's good. I'm not complaining about it. But you can't say it's not tiring. And what else is fascinating, too, is someone made a comment yesterday about, they were saying something about wanting 10 or 20%. And I was like, if you look back in the past like 2 or 3 weeks and count all the up and downside moves, I'm like, dude, we've gone up and down as a cumulatively 10 or 20%. And we're making like 2% move, 1.75% move, 1.5% move, 2% move. Like, I'm counting them up when this guy was saying that, and I'm like, you could have taken just 2 or 3 trades in the past 2 weeks, and you're fucking loving life. It's like cumulatively, the moves have been outstanding. They really have. So anyways, we'll now switch over to the main screen here. And per the market brief last night, you probably already know that I want Captain's Cheap Call Lot is down here, right about 508. So right down here is where I want to be buying, somewhere down in here, 508 if that's possible. I think that's easy to attain on a Friday. So we'll see if I can catch some calls down here today. I would really like to if possible. So I would like to see price get down here to grab some calls for a trip up to 516 right now, somewhere up in here. So I'd like to buy some calls here, so down here, and take them up to right about there. So I'm trying for that trade right there. If price improves and we don't get down here to Captain's Cheap Call Lot, if price improves on its own, and we come back up here, just like yesterday, I will take some calls for this trip higher. So I'll enter a trade in here as well. So those are the plans for myself today. Let's take a look at velocity really quick. and just take a peek. Let's go down to the trigger screen really quick and take a look. My camera's back off again from yesterday. I was on a rant yesterday. I was on a pretty big rant yesterday. Let's see what we can see here at least, and we'll take a look at some other stuff today too. If you really want, we can. But this is good to see. If you're a bull, this is actually really good to see. Your velocity is dropping and price has not followed. That's outstanding for a bull. Velocity is rolling off and price has not followed. That also means that had you had like downsized moves along with velocity dropping, we should be in the dumpster right now, which we aren't. So even if we have a capitulation move here in the market, it shouldn't be as bad as it was thought to be. Another thing we can look at here is hourly velocity. Let's take a peek at hourly velocity here on a 30-minute basis, and it looks like we have more down to go, doesn't it? We had a peak, whoop, and now it looks like we're going to go down and get some new lows. So that's why you have Captain's used car lot down below. Some expectations are that we have more down to go today. But we're not done going down. Let's go over here. That we will, wherever these buyers are, they're going to lose that. We're likely going to go down here. I'd really like to get that. That would make me extremely happy if possible. Or we get improving conditions and we go above here. And these buyers buy it once again, and I'll take that trade. We'll come back down here, take that trade. And that'll be a nice Friday trade if possible. So either way, we'll keep an eye on this this morning and see if anything improves. Main screen. That's a 30-minute basis. And we'll keep our eyes right here and see what happens, right? Sellers were not able to get a new low. You can see right there that so far they don't have the new low. They need that new low. Watch out for a squeeze to the upside. We did back check the 5-minute trigger once already. So we came down, right? Whoop. Check the 5-minute trigger. We came down. The bears really need a new low right now. If they don't get the new low pretty quickly, they don't get the new low pretty quickly because they didn't get that prior low. We have a high probability of now checking. We have a high probability of now checking the hourly trigger up here. So you may see a squeeze here in just a few moments. Price target to the upside right now. If they can't hold on to this 1-minute trigger, price target to the upside, 516.23. So this is kind of like do or die for the bears right now. They need 513.51. 513.51. Bookmap looks like it's trying to help out right now. Looks like there's some supply just above right here. There's some major resistance. So we'll see if that is real or not. See how strong these sellers are here. So right here, they're trying to hold on to this aggressively. You can see that. So right in here, there's some sellers that are parked right here. Super old men. These are actually old men right here. Old gym bros. If they can't hold on to this though, if they can't get a nice little bloodbath, they get overrun. Skies are clear to the upside. So let's pay close attention to this. What else I got for you this morning? Let me read some stuff to you. Give us a sip of coffee. Hold on. And back to the, I left the conversation about geopolitical risks. I am not the best person. I am not always the best person to be asking about geopolitical risks because I have a hard time being objective about it. And I'll be honest about that. I really am. I really have a hard time. I can't claim that I can be as objective about geopolitical risks And the reason being is when I served in the military, I served with U.S. Army Command for a time. And I would sit in meetings. I was an aide de camp. Well, I wasn't an officer. I was a non-commissioned officer, aide de camp. It was a really weird position. It should have been an officer that did this stuff, but it wasn't. It was me. I was in combat arms, and I went colorblind, and I found a slot in Santa Monica, California, 25th U.S. Army Command, right? And so this was for 4th ID in the Pacific Theater. Now, this 4th ID is responsible for like China, South Korea, places like that, Hawaii, right? So, anyways, that position that I had I was a glorified driver. So I went colorblind, couldn't be in combat arms anymore. I reclassed as a driver, and I found a slot available to be a driver for these generals, basically. And so I was a driver for a general, a 2-star general. And so I had to sit in a lot of meetings that I shouldn't, or I shut my mouth and just sat there. I'd drive him places. I'd be force protection for him, make sure that he was safe, bring him his beers at the golf course, that kind of stuff. And it was a great job. I didn't do a lot of work. I'll be honest with you. It was like one of those jobs that you never hear about. They're very hard to get. I happened to fall into it, and I was an AGR soldier. That's an active duty guard reservist soldier. So I worked 30-day contracts full time for the U.S. Army, and it was the best job I ever had in the Army. It was a dream job. You never hear about these dream jobs, but it was real. If you wanted to go to Pathfinder school, you could go to Pathfinder school. If you wanted to go to jump school, you go to jump school. You could do whatever you wanted. They had slots available for anything. I never worked because the general was never there. So, like, one time I went to Korea, and he was there for like, I don't know, like maybe 1 weekend a month, and I had nothing to do. Nothing to do. I actually would do some cool shit. I volunteered and helped other people out, other soldiers out, but the fact was that I sat in meetings, a lot of these meetings that they had, and I can never talk about that stuff, but I'm biased to a point where what you perceive as a civilian is completely different than the reality of life. So like when Iran says they're going to do something, I'm like, yeah, I bet they are saying they're going to do something, but they haven't done anything, have they? And if they do anything, the response is brutal to any of those things happening. So I have a hard time when people discuss that stuff. I'm like, and I really think that you, as a civilian, I already know that most of you don't travel. I know that most of you have never left the U.S. I know that a lot of you have never left the region that you live in. I know that a lot of you that do travel outside of the U.S. Have never traveled outside of a tourist area, or I don't know. I did a hike up this big mountain, right, that every Caucasian does from the U.S. When you spend time in like shitholes, it's a lot different. And there's not many people that do that in life. So my perception is a lot different than yours, right? My perception is like, and the power and the scale of this stuff as well. That's the other part of it. Humans have a hard time understanding scale. It's normal for people to have that difficulty understanding. 1 in 5 minutes, pretty strong for a squeeze, though. When you out there hear something like, "Oh, there was this happened or that happened," and you're like, "Ooh, it's so dangerous out there." I'm like, most people can't understand that there's millions and billions of people. It's not the norm. It's not the norm for you to get eaten by a shark. It's not the norm for an ocean wave to come up the beach and sweep you away. It's not the norm for you to die skydiving. Although we read about that stuff and we're like, "Oh, dude, it happens all the time." You're like, nah, not. It's like a lightning strike in reality. You're more likely to get killed by lightning than a lot of the things that you read about out there. So I'm not probably the best. I might not be the best person to be asking about geopolitical risk. Is my point. I look at it from the perspective of if you fuck around, you will find out. We're like the nation you don't want to fuck around with. You really don't. And if we tell you something like, don't do this. Now, I do realize, though, that people don't believe that. You know who didn't believe that? Saddam Hussein. So Saddam Hussein really believed that George Bush would find him to be powerful and strong, right, for invading Kuwait. And that wasn't the case. So I get that, too. I understand that as well. But from my perspective, what my experience in U.S. Army Command, you would never want to fuck with the United States, ever. Ever, 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 ever. We're like the Roman legions, man. Like when you see like movies and stuff, and or like you saw like Lord of the Rings, and you see like the hordes, and you're like, oh, whoa, they're bad. Like that's us. It's hard to even grasp the power that we have. There are some good books on this too. There are some really good authorities on the geopolitics of the reach of the United States. When you command the seas like we do and the air like we do, like we literally control the skies of the world. We control the seas, the oceans of the world. The geography of the United States of America is some of the best geography that you can have in the world. And those are some big things. They're hard for an American to wrap their head around how vast it really is. A lot of sailors understand this. If you're like an American, or not American, if you're just a sailor, if you sail on the ocean, not along your coastline, but if you've ever sailed from a nation to another nation, I mean, you'll be like in the middle of nowhere, and you'll see a fucking U.S. Navy or Coast Guard ship in the middle of nowhere, and you'll be shocked. You'll be like, what is that? Why is there an American Coast Guard vessel here in the middle of nowhere? And it's because we're everywhere. The United States is literally everywhere. I wouldn't fuck with us. I wouldn't. Anyways, and I want to preface saying all of this that I'm not a Republican. So if you're out there and you're like, why is he talking like this? I am a Democrat. I'm as liberal as they come. But that is the reality. Like the reality versus what we want things to be are different, right? They're separate. So, anyways, geopolitics and its impact on the stock market. I don't see the risk that you might perceive to the stock market. You would really need something really big to happen, and I mean big, like an invasion, like a major loss of life that impacts the United States. You would really need to see a major action for for any geopolitics to impact the United States. Think more like 9/11, or think more like the invasion of Kuwait or something like that. But all this small time stuff, I don't see it. Now I did notice or hear some whispering going on about an event like what took place in Russia happening here in the United States, that there's some concern that could happen. That would be like a 9/11, wouldn't it? That's more in line with something like a 9/11. So yeah, if something like that did happen, it would rock our markets. It would impact our markets. I think that was a concert or something like that. There were 200 or 300 people that were killed. An event like that, yeah, that would impact our markets. I don't know that would impact our markets if it happened in Israel. I don't think that it would, but it would have to be something on U.S. soil. What else you guys got there? There was some talk about it, though. I want you to be aware of that. Now, I did read the article about that, so I think that was the FBI that said that this past week, that there was concern about a similar attack that took place in Russia happening on U.S. soil. But then I read the rest of the article, and the rest of the article said that this threat fear was tied to some loosening of surveillance laws in the United States. So I'm like, that's so unfair to keep the laws in the books. So I'm like, it's probably not real. Sellers trying again one more time to break through this support and catch a new low. They are really working hard here to get below. It is Friday, normally a slow trading day, so if they were going to get it done, it would be today. They do have the chance to. Let's see if they can catch it right now. I'm going to read a few things to you here, okay? Just going to read a few things to you here this morning. Headlines are dominated by a possible attack of Iran against Israel, maybe as soon as today. There you go, geopolitical risk. Bank earnings. The S&P 500 energy sector is trading 0.5% higher. Financials are 0.1% lower, mostly due to JPM, which is trading 2% lower after disappointing guidance for the year. Although I'm interested in that trade on JPM. The S&P 500 is back in a short gamma regime. Yesterday, the move higher was not supported. We needed to get higher for us to become supportive. What else we got here? I do want to show you this really quick. This is the Prime book. So I'm going to bring this make this higher here for you. This is from Goldman Sachs. Oh, hold on here. This is from Goldman Sachs, and this is a chart showing you that hedge funds. This is the lowest that hedge funds have been long in some time, but it is turning up right now. Hedge funds are actually buying here. I want you to see that. Hedge funds are actually adding to the market right now. It's the lowest point that the over-under weight in the stock market that hedge funds have been since 2020, the bottom of 2020. I just want to key you into this right here. And we're turning up right now. Hedge funds are turning up, trying to buy this market. So all the doom and gloom that you're seeing out there right now may be a function of looking for a dip to buy from hedge funds. Hedge funds are starting to actually buy this right now. So Captain's cheap call lot, if you're a hedge fund out there, I'm sure you want to get down here and try to buy that as well. Hang tight here. So hedge funds, the lowest points for hedge funds since the bottom of March 2020. Collins this morning saying it's too soon to tell if we have an inflation bump or more. I now see the Fed cutting later than previously thought. According to Larry Fink, it will be tough for the U.S. to get to 2% inflation, cities trillions in fiscal stimulus. Michigan consumer sentiment this morning was 77.9 versus 79.0 expected and 79.4 prior. The one-year inflation expectation is 3.1% versus the 2.9% that was expected and the 2.9% from before. 5-year inflation expectation is 3% versus the 2.8% expected and 2.8% prior. The 10-year note yield was dropping to new lows in a report of aircraft intrusion in northern Israel. Also, after that, the White House does not comment on the reports of an imminent Iran attack on Israel. Says it is a viable threat that is being watched very, very closely. My hope here is that we have a new low, by the way. That's good to see. You did finally get the new low if you're a seller. The hourly trigger has yet to cross the daily trigger. Hopefully, it can blast down here and trade 508. The White House does not comment on reports of imminent Iran attack on Israel, saying that it's a viable threat that is being watched very, very closely. I'm going to take that statement from the U.S. saying that they're watching it very closely, that we probably have a carrier group off the coast of Iran, and we have jets spun up, ready to scramble and bomb the fuck out of anybody trying to fuck around and find out this morning. So I would expect swift response from the United States, or even the ability to thwart any attack by Iran. Al Jazeera is saying that, according to an American official, reports about the possibility of an Iran launching an attack on Israel today, Friday, are not yet confirmed. I hope that they do. I'll be honest with you. That's exactly. Glass them and move on. My thought here is that whatever is being planned is being watched very closely. The moment that they fucking squeak out a fart, there's going to be a fucking F-16 right up their ass. Or an F-22 or something like that. What else? What else do I have for you? I'm actually okay with the threats, as long as Iran's threatening. I'm like, yeah, it's fine. They can threaten away. Normally, countries threaten just to create chaos, as like Maxwell Smart would say back in the day. But I'm going to assume here that the U.S. is on top of this 100%. And I would not want to be the guy that fucks around and finds out. What else do I have here? I'm going to turn on the news squawker at this point so that if anything does break, if there's any breaking news on an attack, that you can hear it. So you have that. Sorry, excuse me. An American official told Al Jazeera, we are moving additional military capabilities to the region to enhance regional deterrence and measures to protect our forces. Yeah. You guys know that we can fire a fucking missile from like halfway around the ocean and it'll hit its target, right? Like, you guys understand like the capabilities of our country is insane. Yeah, that's the other side of this too, right? You see, like, Biden is trying to get Israel to stop being so aggressive, and that's something else entirely, right? If you think we're bad, like, Israel is, Israel's got their finger on a nuclear button at all times, right? Israel does not fuck. I mean, Israel is like one. Israel. My father. So I served with some IDF soldiers in a training environment, and like my dad was always like never trust the Australians, never trust the South Koreans, never trust the IDF. My dad was in the army too, by the way. And I was like, why? And he's like, they're fucking crazy. South Africans, you don't fuck with those guys. Like they're like they're ruthless. They don't soldier like normal soldiering. They do ruthless things. Russia's the same way, right? Just like they bring the brutality to war. Yeah, it's gross. My dad used to tell me stories of when he was served in Vietnam that I'm not gonna say. I don't know if I already said that, but some of those soldiers that I just listed would like put like ears around necklaces and carry them around their necks and stuff. Like, these guys don't fuck around. Purportedly, price bled down to 512.52. This is your first price target right here. This yellow box. Your second target is 508C. Where I want to monitor closely the hourly trigger if it's going to cross from above. me a quick second here. I gotta rotate my neck. Give me one quick second here. I do have some good news for you today. Let me see if I can say anything about this or not. I guess I should look for Iran, right? Not Israel, because they could pull off their attack anywhere. So I'll leave something up here in the background. Twitter is still good for that stuff, so I will watch it and monitor it with you today. Let me see. I'm going to tell you guys something that's important. So I have a list of, I want to say about 10 people that have either been a mentor of mine directly or indirectly that I trust. And I mean for my trading. And they have, if they've either been a direct mentor of mine or an indirect mentor of mine over the years. And I trust these people. You know who they are. They have like a lot of followers. They go, sometimes they're on CNBC. Sometimes they are historied, right? Like I was this or I was that or whatever. And you also know my thoughts on preserving before it's lost some of these people's histories. And you also know that I discuss often on this show the importance for you to pick their brains, find out who they are, what their experiences were, and that you don't want to lose that stuff. It's important for you to have that historical context because, like, were you in a pit in 1987? Were you at Lehman Brothers? Were you at Enron? Were you a trader when we had the housing crisis? Were you a trader during the dot-com bubble when CNBC was showing Apple going up 5% in an hour or two? And if you haven't, you want to follow those people and worship at their altar, for lack of a better word. Why, though? The reason is because once they fade away, they start to retire, they start to age out, they move on to playing golf. You start to lose that that experience, right? One of those people that I look up to, which is a lightning rod, is Victor Niederhofer, right? He's a lightning rod. People hate him. People have lost their money due to his trading. He's blown up funds, right? So he's a lightning rod, but he was doing it, and you want to know what they're doing. He's older now. This guy right here is, I want to say he's in his 90s. I could be wrong. But I still follow him. Like, I follow him. He's got a blog that he posts to, and he talks about music, and he talks about writings and experiences. And he uses language that I really find fascinating that was probably language from when he was trading many decades ago. But it's important to keep those historical things because these guys can lend insight. They can lend wisdom. The most important one is wisdom to the conversation that can help you be a better trader, better investor. You guys sit at the altar of Charles Munger, right? You guys sit at the altars of these guys that have been around for a long time, and they're very good at what they do. And as they've gained this wisdom over the years, they probably see a lot of the stuff that you and I do, and they're like, they laugh. They're like,
US stocks extend their fall. That's the Dow Jones down 1% now. S&P's down over 1% at around 1% in the red.
they probably look at someone like me or you, and they're like, "What a bunch of dumbasses," right? That's wisdom. You probably look at your own life when you were like, "I'm an adult," and then you turn 30 and you go, "Jeez, I was just a kid at 20 years old," right? You can even do that upon self-reflection. You can look at yourself as a 25-year-old, and maybe you're 25 years old, and you look back at yourself when you're 15. Think about how old you felt at 15, and you realize that you're just a kid, right? So, uh, tentatively, I asked one of my heroes, someone that I trust 100%. This person is usually um, by themselves in their positioning and thesis against the masses, and he's usually right. So if the bulls are the loudest they can be, he's talking about the opposite side of the trade at that point. If the bears are the loudest they can be, he's usually the opposite side of that conversation. And he's usually alone having that conversation and being ignored, which I find fascinating. Because he's usually right. He's usually right. Um, and so I get scared when he's like that. I'm like, oh fuck, here we go. Right? I don't want to be long right now while he's saying these things. um, so he's a hero of mine. And I tentatively asked him if he would be open to an interview. And he has tentatively said yes. Not committed, but tentatively said yes. This guy has not granted an interview to anyone. He has been asked by many for an interview, and he's said no. So number one, if he does an interview here, I don't know the format of it. It might have to be I can't tell yet if it's going to be an interview where we do it with just members, like a private interview live, like a quiet fireside chat, or if it's a recording, or if it's just open to the public, or if it's something that we don't tell everybody out there on social media. We just like run it without giving notice, and then the recording will be available for people to watch later on and stuff like that. I don't want it to be overwhelming for him. And I don't want, I just want it to be easy going. But anyways, he's tentatively said yes. And it's something that you do not want to miss. This guy is not, he's a very private person. He's, very well known and, has a history, in our markets. I'm not going to tell you more right now, but he is going to be on the show, and I would be there if it was if this guy had given an interview anywhere, I would watch it, and I would be quiet and just listen to this guy talk, because this guy knows what he's doing. He's like on the caliber of a Larry Williams. That's the caliber of this guy. When Larry Williams talks, you listen, right? If you see Larry Williams on a video, you shut up and you listen to what he's saying. You write things down when he's talking. So we will try to have him on the show either on a weekend or when the market is slow. I'm going to try to do this either like outside of market hours or on a weekend, on a Sunday or something, or Saturday if that's what he wants, or on a really slow market day, so that we can absorb what he's talking about. Let's see what we can see there. Should get a nice little blast down here. And I am beside myself. This guy's legendary. Legendary. So look forward to that. I don't know how we'll roll it out to you. If it's private, I will roll it out to the community just before it happens so that you're aware of it. If it's public, I want to ask him how he wants to proceed, find out the parameters of how he's willing to do the interview. And it'll be similar to the interview that we had with Mr. Yen, where I ask a question or two. Now, I wasn't prepared for Mr. Yen. I apologize for that, but I will prepare questions. I'll ask or show them the questions in advance, so there's no gotcha moments. We'll take questions from you guys. I'll let you know in advance so you can think of questions you want to ask. If you have anything for him, and what we'll do is we'll let him talk. We'll just sit back, let him talk. And we'll find out what his favorite color is, his favorite movie, his favorite gun, whatever it is. And it's going to be a blast. I can't wait. Bouncing off 512 right now. Near perfect strike. No, thanks. I appreciate it. Yeah, I want you to know, if you, I want to say this too about this guy. If you are young and you have friends that are young, becoming investors or traders, this is a guy you would want to sit down and listen to. This guy is a voice of reason, and he's not a retailer. He's a professional, a well-known professional. And he's usually the voice of reason when all reason has been lost in the market. He's got more wisdom than He's got more wisdom than I wish he was my dad. Kind of wisdom this guy has, in a lot of ways. I mean, and the coolest part about this guy is he's never sought out fame or anything. This guy has just done his own thing, and I love it about this guy. I love it about him. He's one of my heroes. He's like Larry Williams, man. He really is. I asked Larry once. I was like, dude, why do you keep staying in the market? He was like, I'm bored as fuck. I was like, really? He's like, yeah. He's like, I'm too old and I got nothing better to do with my life. And I was like, I love that about you. You just put yourself out there still to this day. So anyways, look forward to that. Don't want to say his name right now because I don't know if it's confirmed, but he said yes. But we still need to have some discussions and stuff like that. Make sure that everything is right. This one right now is going to turn into a red box right here. So this was yellow, right? So we're going to switch this one to red. This now becomes a place to sell. Let's keep our eyes on that hourly trigger still. See if we can catch this break right down here. We retested the 5-minute trigger already. We retested the 1-minute trigger. The 1 minute is violently heading vertical right now, so we should get one more down move here. Good possibility of it. See if we can break below this yellow line right here. Get one more tag. So it might be a little bit higher. Right there. What else do I have for you here? Let's take a look at SPX really quick. We're going to go down here, and I'm just going to show you Gamma. Happy Friday, by the way, to all of you out there. Okay, so pretend this isn't here. And none of this was here, right? We started out this morning, or last night, when we left, there was actually there was a blue line here yesterday. Whoop, there was a gamma line right around this 5,200. It's not here this morning. It's gone. The gamma's gone from 5,200. We're now blasting down. That support has gone away. We're going to clear all this now so you can see this red line. And we're beginning to break below support in the market. See this? This is support in the market right now. We're beginning to break below it. I want to draw your attention down here to 510. This is actually lower now as well. 5057 is when we get, we have down here, I should say, sorry, this is begin sell the rip up here. This is 5,100. This is just the beginning of it. And this is when we begin to capitulate the market down here. This is when you get trend. So we have sell the rip. So anything below this 5,100 becomes sell the rip. And we begin to get some violent moves down here and here. I've been in ship sell the rip doom. This is when we get like we'll hit like a 30 or 20 in market breadth, and they'll start to liquidate the market below here. You'll get trend followers and stuff like that, and we'll get some real big violent moves down. There's 49.80 down here. All this stuff here will go away. We'll go all the way down to 47.60, 47.50. You get another tag down here, 49.84. So things get from 5,100 down to 49.80. We get violent moves down, like big, like 1%, 2%, 2%, 4%, big moves. So pay attention to this down below. This is buyer bottom support. So anything down in here would be a place for you to buy as a buyer. You're trying to buy all this stuff. Buy. If we lose all of this stuff and start heading down like that, get the fuck out of the way, because we're going to start blooding it up pretty bad down here, okay? That's 5,100. And this is 5,150, I believe. Could be wrong, but I think this is 5,150 down here. And you know that we're in volatility right now. Just so right now, we're about in volatility, right? And we were unable to get above. You see that? So we came up here yesterday. We needed in the overnight to be pushed higher, or this morning to be pushed higher, or the opening bell to be pushed higher, and that did not happen, did it? We would then get supportive flows and be able to attack higher highs, 5,300, 5,500, stuff like that. So no place. Oh, wait a minute. Am I losing the stream? Yeah, so I think you can still hear me out there, but I'm losing. Oh, you got my back on again? Can you see me right now or no? Clap my hands. Can you see me clap my hands? Okay, you can see me again? Okay, cool. I almost lost the stream for a minute. The stream froze for a minute. My computer froze too. So just right now, buyer bottom support right here. Right? Begin sell the rip is down below here. That's where it gets nasty. Just so you can see right here, all this stuff right here, right? This is, we bought this. Yahoo, let's do it. Party time. Yahoo, buy that. Party time. Yahoo, buy that. Party time. Yahoo, buy that. Party time. So we're going to find out if this is more Yahoo party time or not. I would really like to see a new low down here, though, for party time. If you're an Elliott waiver, out there, you probably already know that this is like what is this, like the fifth count we're on right now? So this should be bottom. If you're an Elliott waiver, you're part of the eraser gang, you probably already are anticipating that whatever bottom this is the bottom. I don't want to say that to you guys, though, but the Elliott waivers are telling me that whatever this bottom is probably the bottom. Like this is it. Bull's last chance down here. Yeah, racer gang. They're gonna break out their erasers all the time. I like Elliott. I mean, I like Elliott Wave, but I don't like it alone. I like Elliott Wave combined with Gamma and triggers and velocity. I just don't like it on. I don't like it on its own. I don't find it tradable consistently enough with an edge on its own. Personally. Now, I know some of you will argue against that, but I do use it. I just don't rely upon it. That's why I call it a racer gang. I know a lot of profitable Elliott waivers. I can't say that I don't. They watch multiple counts too. They watch bull and bear counts, so they adjust to it, right? But the thing that I always think about is this. How I look at it is like this. There are a lot of funds that trade Elliott Wave. There are. I would say to you that you need to be aware of where people trade. I think it's important to know what people are trading. So if there's people that are trading Gamma, you need to know what they're thinking because they're going to trade the Gamma. I think it's important to know what the Elliott Wave counts are because people are going to trade to it. Fibonacci retracements, extensions, people trade to those things. Whether you like that or not doesn't matter. But what does matter is that there will be supply and demand at those places. That does matter, right? So traditional chartists, if you have a I don't know, bull flag, and I don't know, we've had a descending bull flag with 3 tags on it, people are going to trade it. So even if it fails, you want to know about it at least, right? If you're at a 618 fib retracement, you want to know where that is, right? Because people are going to trade it. You're going to see a reaction there. Self-fulfilling prophecies. Yeah, I agree with that. I think if you overlay all of those things, and then you look for, and then I would layer all that on top of a clock or a calendar. So if you have all those things, and then you layer that on top of a clock or a calendar for accumulation and distribution on multi-time frames, I think it's very easy for you to see the swings in the marketplace. Am I going to get my captain's call out or no? I always love this captain's cheap call out. I love it. I usually make a lot of money down here, so let's see if we can catch it. Yeah, if you layer all of those things on top of each other, and in your brain at least, if you can do that, it gets easier. Things get easier. You're like, where are the Elliott Wave guys at? Where are the Gamma Bros at? Where are the traditional chartists at? Where's the 4-hour candle? Where's the 1-hour candle? Where's the half-hour candle? What time of the day is it right now? Is it 1:30? Is it 10:30? You know. Are the put terrorists out at 1 o'clock today? Or is the vol control gang out at 1:30 today? Who's out right now? Who's swimming? Is it the London? You guys do this with me all the time, right? Is it London closed right now? Is it Japan open? You know, like what? Like is it the U.S. closed right now? What's going on? Are we having a bill or a bond auction going on? Do we have news coming out at 8:30 this morning? Like, so all those things that happen through the course of a day are like trying to keep track of them all at the same time. Happy Friday. It was a great couple weeks. I'm stoked. Past couple weeks have been great. Been great trading anyways. If you're a bear out there, you must be happy, right? If you're a seller, you got to be happy. You guys haven't had many opportunities since October, so past couple weeks has to have been good for you. Been good couple weeks for traders to make money. Like traders, swing traders, theta gang's probably doing really well. There's been some nice pullbacks. There's been some nice tops. It's been really good. I'm overly impressed. They're never happy. I know. I noticed that this week. I'm like, dude, you're getting pullbacks all the time. You can start your tops all the time. You got tops every day. Here's the top. Here's the bottom. Here's the top. Here's the bottom. Here's the top. Are we selling the open or buying the open? Okay, we're selling the open. Are you buying the close? All right, we sold the open. Now we're buying the close. The top is you want me to talk about gold? I can. We can talk about gold if you'd like me to.
So noting
it's only a temporary top in gold.
October 2023 at 18.66.
Here, I'll chart gold out for you. Give me just a quick second here. What can we do here?
So analyst commentary on the markets today is the global finance.
Do you want to stay up to date with the latest and be on the bleeding edge of
what were they just saying?
farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Brent's hitting as high as $92 a barrel earlier in the session.
Where are we at right now? Oh, by the way, Charles D. Charles D, are you out there? Charles D, if you're in the audience, I missed your question yesterday. Do I have any texts right now? Nope. If Charles D is out there, I'm going to chart AMD for you. I went through some of my messages yesterday. Charles D was wanting some stuff. Let's see where we are here. 30-minute chart. Okay, you ready for a gold chart? Okay, let's get a little bit closer here. Okay, so this is the top on gold. I'll tell you that. Well, right now it's the top on gold. Push. Give me just one quick second here. Okay. He didn't know that that is the top on gold. Let's move up. Hmm. Okay. So I'm going to say this to you in gold. Um, Whatever this rollover here is likely going to be short-lived, though I do think you break below 2382. I think your next dip buy is 2350, possibly 2320. You could have a capitulation down. This hourly trigger is going to break. In my view, it does break. So, but by the time the daily trigger gets there, it's likely going to be at 2350. right around 23.50, and you can see it back here. You got a lot of buyers back here. This is very supportive back in here. Very supportive. See all this? See this zone right here? It's pretty supportive right there. So all this stuff in here is good for gold. This is the place where they're buying from right here. Okay. This impulse move up here, and this bullshit right here, this is FOMO. And so this is just FOMO. This means nothing. This all gets erased for right now. That's all FOMO. And they're coming in from a place here to push this up. And they're likely going to try to pick this back up right down in here somewhere, okay? And you're going to find some consolidation to then make another leg higher, okay? So personally, if you want to be a buyer in gold,
So seeing from Sky News Arabia that the Israeli Minister of National Security holds a meeting with the leader of the police, civil defense and emergency services to ensure that their preparedness for an Iranian strike.
I need to draw that better. Price target on gold, 23.50, 23.50. Saying that though it's firm support, firm support. You should consolidate down here, but you are going higher. Somewhere in there just like this. You should see some kind of you've got that capitulation move, right? You're going to bounce back higher, take it back down here higher, but you're going to get down underneath, and it's going to push you down in some kind of capitulation. You'll consolidate, come right back up, and be off and running again. This will come down just like that, and then right back up just like that. So right underneath, back up again, and then right there, and you're off and running again to the upside. So I am bearish on gold to 2350. I don't think you lose the support though, and I think you're going to come right back up again, and you're going to this is going to turn into a base here for you. And you're going to base all this stuff out right here, and you're going to begin moving higher once again. Price target on gold. I don't think it sounds crazy to think 5,000. I don't think 5,000 is off the table for gold. That's pretty high, but I was looking back in 2010, 2012, and it looks like, so 2010, 2012, I think they doubled the price of gold. So I don't think it'd be out of hand to call. I think it's pretty high. It's like maybe like a 15% chance of getting straight to 5,000. But doubling the value of gold would not shock me. Tell me what you think out there. Doubling the price of gold, I think, is possible, even after all this move here. Yeah, 2150. Yeah, right in there. You could have some stagnation in here. It's possible. Shit, what am I doing there? Come on now. Damn it. All right. I'm having a hard time. I think gold, you could go as high as 5,000. I would set your sights lower. Dude, what is going on with this today? All right. I don't know what's happening. I'm having some really wonky shit going on. You hit you had a peak of 2432. So I'm not going to say 5,000. I shouldn't say that to you. How about 2,500 after a period of consolidation? You should get above 2,500. I don't think you're done going up. My first target would be 2,500. I'm not going to get crazy with you guys in this because you're going to be like, Cap called 5,000. But I think if it depends on how long the market stays up. If you can stay up until like March. Damn, you're having problems today. I'm like switching so fast. Now that's your next target above 2,500. Period of consolidation. Come back up, and then start making a move higher to 2,500. I would say something to you here. I think that this is this consolidation is probably higher. No, it's right there. That's what the consolidation is. I got that right. What's up, buddy? What are you doing? Coming in to hang out? So that's gold. So this is what I'll tell you on. I'll tell you on gold. That's the temporary top on gold. Look for a pullback. Look for some consolidation lower. I think I said 2350, and you're gonna make another attack to get above 2,500. Dude, don't turn around on me. Do not turn around yet. Come down lower. Sell this shit down, bears. Just give me one more leg down. One more leg down. Come on, bears. Oh, yeah. There goes VIX blasting up. VIX 9-day trading $19. You know, this might be it. Oh, you know what? This could be it. I'm going to take a long here. guys on fucking. Come on, baby, don't leave me behind. Don't leave me behind. That might have been bottom. I'm watching VIX 9-day here. So this is VIX 9-day. And we're coming into some pretty fierce resistance. Got some calls set up here. Have not bought them yet, but I'm going to look for a bounce down and then a move right here. I'm on 515 Cs. Haven't taken the trade yet. Just looking for one more pullback here. I think that's bottom. I was hoping for lower, but I think that's it. Basing that based upon VIX 9-day. Yeah, it's all sitting on where supply is in IWM. GCT back on its daily trigger again. It's good to see. Apple plowing ahead still. Apple's doing just fine here. Apple's doing good. They're at their second target to the upside. They had some selling on their weekly trigger. I don't want to see them roll down. I don't want to see Apple get sent down. Apple should go into some consolidation for a little bit of ping-ponging. Ping-ponging here. Bam, bam, bam. I'm just gonna wait. And I hope I don't get left behind. I'm hoping there's a quick like reversal here and then straight up. I might get left behind in this trade. NVDA is looking beautiful. It's got a tweezer reversal to the upside. Palantir trying to escape to the upside right now. XOM getting blooded up here. Tesla hanging out, doing nothing. Snow looking great right now. I was telling people to look for a dip buy on Morgan Stanley at $75. Right now we're trading $85. Charles D, AMD, baby. You're coming into your weekly trigger. So Charles D, if you're out there, look for some consolidation and a break higher. Something like this. Just ping pong around. Get above the daily trigger, and then you're off and running above. Dixie rolling over slightly, trading almost $1.06. Looks like a top in Dixie. Looks like a top in VIX 9-day. Japan yen, USD, JPY yen, getting rolled a little bit. Buyers still though on the attack there. IWM looking like it's basing. GCT basing. Apple consolidating. NVDA looks strong. Palantir trying to escape the vortex and go higher. Trying to break above its daily trigger. XOM getting blooded right now. So I'm just looking for a dip buy, right? I'm just a little sloppy right there. Something like that. See if I can catch some calls here. Shit, I missed this. I wasn't even paying attention. Wasn't watching. Over here just blabbing away. I know. Moment. Blah 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 blah. Not paying attention to the turn. That pisses me off. If I had seen all this stuff, I would have been like, yeah, we're doing that right now. They're not even going to give me a buy-in, are they? They're going to leave me behind here. I'm no calls right now. I'm not taking them. I'm getting left behind here. We're gonna rip some faces off right here. Blah 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 blah. Over here, just like fucking mouth breathing. Here comes the squeeze. I'm not in the trade. I missed it. I'm not buying this. I'm not chasing. I refuse to chase, so you can get fucked. No, I'm not paying your high premium. I've had enough good trades this week. I don't need to, so I've had a pretty green week, so I'm happy. Give me a bloodbath or something. See if I can find anything on Iran right now. Nice. We're bringing in a destroyer to Israel. Hell yeah. Anti-missile ship with high defensive and interception capabilities near the coast of Israel. Yeah, dude. I want to see fuck around and find out. 100%. Watch out here. The market is getting really quiet. There could be news we don't see. We're very careful here. I was unwilling to buy. I want to like pull back. Give me a pullback to buy. Any kind of pullback and I'll take it. Calls are too expensive. I was looking at calls and I'm like, yeah, 70-cent calls. No, thank you. Like 515s are like 80 cents. I'm like, nope. Every time I see like 20 Delta calls for like $1.80, $1.50, I'm like, eat a bag of dicks on a zero date. And it's 11:30 in the afternoon. No, thank you. I ain't doing it. You give me some cheapies, I'll buy it. Like 20 cents, 30 cents. Fuck yeah. I'm a cheap fuck, dude. I'm super fucking cheap. I'm cheap as fuck. Go ahead, blood them down. Give me like one big red bar and then that's the dip buy. Give me like this. Give me like give me like 30 seconds of that so I can come in and buy all that. Just like drop the floor for like 5 minutes. Because I couldn't get in the trade, so I'm not nice. Well, I missed the trade down here, so I ain't buying shit. I'm going to take my toys and go home. Now give it to me. I'll take it there. Good 2 seconds. I'm gonna take a quick break. Let me I've been awake since 5 a.m. So I'm gonna go do 25 quick jumping jacks, make sure that I don't pass out here and stream. I think the whole entire week is just like hitting me like a Mack truck right now. My body's like, it's okay, you can just take a break, dude. Just take a nap. It's over. Shut down all the systems right now. Turn your brain off. You can do it. Fucking nodding off in the stream. You guys are like, oh, dude, that guy's doing fentanyl or something. Oh yeah, like last night I went into fucking the Discord at like 8:30 or 9 o'clock, and I'm like, there's a fucking bull trap. If you're a fucking futures trader, sell the fuck out of 520. Sure than shit. Right as rain, they did. And that was at 8:30 last night. I was like, there's a bull trap here for sure. They're going to fuck the bulls over tomorrow. Hammer your sell button. Oh, you did? I had to take I took a sleeping pill last night. I was like, I'm not gonna stay up and think about this shit all night long. So like last night, so this is where like last night I took a sleep. I don't do that ever, never. But I was like, I'm not thinking about this all night long. I'm so grateful that I did, because I woke up this morning and they didn't fucking drop it until 5 a.m. I'm like, oh fuck me. I can't even imagine I've been like being a PJ trader, just sitting there all night long, like just watching for the roll, and then it doesn't come until 5 in the fucking morning. But you got the roll. It was before cash market. I did warn Twitter last night, so I warned when I first saw it. I was like, I gotta warn Twitter. I don't want to be called an asshole on Twitter. So like, I'll say something on Twitter and I'll say something in the Discord. Ugh. I'm in nothing right now. I was thinking about buying some calls, 0-day calls, but they're too expensive. I didn't want to buy like an 80-cent 20 Delta 0-day at 11:30 in the afternoon. It's like just begging to fucking get torn down to like 30 cents or something. So I'm not willing to chase that shit. You're never gonna see me chase like. It's like some days I'll come in here on like an event day, and the dealers will be like,
Barack Ravid, who has a scoop on X. He says Iran sent a message to the Biden administration through several Arab countries earlier this week, noting that if the US gets involved in the fighting between Israel and Iran, US forces in the region will be attacked. This is according to 3 US officials who are being cited by, again, Axios reporter on Twitter, or X.
It's good that at least they're saying it, not doing it. At least they're saying it.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
But you'll never see me. You'll never see me chase that shit. Like I'll come into the stream some days and I'm like, oh, here we go at events, and I look at like a 30 delta fucking 0 to 8 that for an event that's 5 minutes away, and I'm like $3.50. You out of your fucking skulls? Get out of here! I'm like, they ain't buying that shit. No, dude. Oh, all I'm thinking about right now is like I shouldn't be saying this because I'm pretty anti-war, but I'm getting all like in my brain. I'm getting all fired up right now. Like
warns you
fucking
to stay out of the fight with Israel or face attacks on troops.
oh, dude.
Axios pieces on the feed if anyone's interested.
Like you say shit like that. If I was a U.S. soldier right now, I'd be fucking hard as fuck right now. Let's do it. Like, let's fucking do it. Step on up. Step the fuck right up. Woo! Step the fuck right up. I shit you not. Step the fuck right up. Let's do it. Oh, man. Fuck around and find out. Let's fucking do it. Oh, man, dude. Oh. Sorry. I shouldn't be saying that shit on stream. So I apologize. I really do. Truly apologize. I don't like repressive regimes. I'm sorry. I'm not a fan of repressive regimes. I'm not down with it. Not down with it. Not down with repressive regimes out there. I don't like people that like brutal regimes to humans. Oh man. And I'm not condoning Israel either. I am not condoning Israel's actions in any way, shape, or form. I'm not down with that shit either. But dude, like brutal, like what? You want to fucking do some shit? Let's do it. Let's fucking do it. Let's do it. Bring it the fuck on. Trading 513.91 right now. If you guys market green boner candles on drone launches. Yeah, I'll stop talking. I'll stop talking about it. I'm all fired up right now, like listening to that shit. We told you on Twitter, like we'll fuck with you. Like, dude, bring it on. Bring it on. Threaten me. Let's do it. All day long. Threaten the US. Let's do it. All day long. I'm a humanist. I'm anti-war. I'm anti-fight and all that stuff. But think of it like this. Think of it like you're, I don't know. It's like being raped or something, right? Repression and all that kind of stuff. I'm not down with that shit. I don't like weak people being hurt and all that kind of stuff at all. Not down with it. Not known for being down with it either. If I see like a big bully out there picking on somebody, come get you, 100% all day long. U.S. definitely not a bully. I guess you should ask yourself, would you like Russia to be running the high seas or China running the high seas? You probably would not. All right, I'll stop talking politics. I'll keep those. I will not another word of it. I will not another word of it. I'm getting all fired up right now. I shouldn't. I apologize to you out there if you're like, fuck you, Captain. I get it. I understand. I will not bring it up again. And I understand. Am I going to get cheap calls here? They're 69 cents right now. They're a little bit cheaper. I mean, even though I'm a Democrat and all that shit, you got to understand I was brainwashed by the U.S. Army. So it's like a trigger. It's like a light switch. Click. It's like a light switch. Still holding May 35th. I still got my May 3rd. Not May 30th. It's my May 3rd. Still got them. Have not sold. Not going to. I'm bullish though. I've not turned. If we turn to sell the rip, I'll tell you. If we become sell the rip, I will tell you. I'll cut those calls loose and I will turn into a seller of the market. So very clear right here. We are buyers of the market still. We are not sellers of the market here. We are not sellers of the market. We have not had a correction. If we have a correction, we will trade. We're at a 1 minute chart right now. You guys got to scale out a little bit. So if I become a seller of the rip, I'll be targeting 485, 490, something like that.
Prints this morning, Citigroup's extending declines to 3.2% now, that being the most since January the 16th.
Still have no confirmation of sell the rip, so I'm a buyer of dips still. But I will sell the rip with you. No problems. Still no confirmed correction.
At the top of the hour, 12 p.m. Eastern Time. Expecting comments from Fed's Goolsbee, who's speaking on Fox Business News.
I will say this, though. If the bulls can't get up here and we reject this at any point, I'll sell the fuck out of that. Definitely sell that. You're getting close. You almost got it. Same as yesterday. I mean, this is very similar to yesterday, right? Oh, let's just show you. Let's just show you. Not you, not anybody out here particularly, but yesterday, if I had become a seller of the rip, I would have gotten smoked and blown up my account. So, I have wealth preservation. I've got children. I have a wife. I have vehicles to maintain today specifically. That cost me a lot of money. So I have a life. I own houses. So no, I'm not a seller of the rip. And if I was a seller of the rip here at this moment, I would be homeless working at Wendy's. So no, not a seller of the rip here. Yeah, let me take a quick break. I'm gonna do some. Let me do some jumping jacks and shit like that. I gotta get motivated here. I gotta get like my blood pumping and all that kind of stuff. Kind of dragging ass at the moment. I'm gonna take a quick break. I'm gonna leave this up for you. We're kind of floating around right now. Looks like they're looking for some news. If you look here on Bookmap, we're just kind of like floating around. Let's flip over to Bookmap really quick. Take a peek. Just see what's going on with liquidity in the market. Just want to show you this. It looks like right now at this moment, like they're waiting for some news. There's some news that's being awaited in the marketplace. And let's look at some other stuff. So from this perspective, what does this look like? Buyers are stepping in, right?
5 minutes time now at the top of the hour. We expect comments from Fed Goolsby, who speaks on Fox Business.
And we're looking to go higher. So right there. Oh, come on now. Right there. Damn it. So just looking for a dip. I wanted to buy this down here. This is what I wanted to buy. Was right down here. And I'm not getting that. So maybe I can get that. Maybe I can get down there and get that dip. But no, I'm not a seller of the rip. We have no confirmation of sell the rip yet. If we do get a confirmation of sell the rip, though, I'll tell you at that point. I'll make it public, too. If it ever happens, like in the overnight, or if it ever happens, like on the weekend or something, I will let I'll say it everywhere. We have confirmed a correction for a downside move until conditions improve. You sell every rip on the half-hour and hour trigger. But until that happens, no, we're still buyers of the dip. Sucks to say it, but it's true. Yeah, I got you guys covered. I will, without a doubt, say something to you. Stuff like that, I'm pretty public about, consistently across social media, because it is important. You need to know the difference. It's critical for you as a bull to know that too. If we are buyers of the dip or sellers of the rip, if we're sellers of the rip, man, you're not fucking buying. You're not buying dip. The only other thing I would say to you would be, if you're not comfortable selling the market, I'll show you where to buy the dip, even in a sell the rip place. It's the exact opposite of me telling you in a bull market, take the money and run. I'll say to you, you'll hear me tell the bears, take the money and run, and that's the time for you to step in for a squeeze. Nice. Good job, WikiFace. Yeah, so let me show you. Let me give you guys an example of this so you can understand. I'll give you a pretty easy example of this. What do I mean when I say that? Hold on a second here. What does Cap mean by sell the rip, buy the dip? Okay. Fairly easy to see, right? It's fairly easy to see, right? I'm going to show it to you right now. So do you see the yellow line, right? So when we are trading below the yellow line, we are sellers of the rip. Even here, you're a seller of the rip. You're selling underneath the daily trigger, okay? When price is above the daily trigger, you're a buyer of the dip because we're going up. See how we go up above the yellow trigger, the yellow line, and we go down below the yellow line, right? Now, there's some things to say here. You might be wondering, well, Cap, how do you know? Cap, how do you know that you're still a seller of the rip when price gets up here? And I'm going to show that to you right now. Every day I drill into your heads.
Comments from Fed Goolsby as they appear on Fox Business News.
So I always tell you guys, I give you guys trading rules, right? So we reject the daily trigger, we go down, right? We come back up here, we go down,
We
right?
want to stay up to date.
We squeeze up higher,
Leading edge of news,
but we failed to get a new high, right?
Sign up today and get our special
See that?
offer
Failed to get a new high. That means we're still sellers of the rip.
for the price of one.
Sell the rip. Sell the rip. Sell the rip. No new high. Sell the rip. Back underneath the yellow trigger. When we're above the yellow trigger and we're getting new highs, new highs, new highs, we're buyers, buyers, buyers. So we start rejecting this yellow line here. We still need the confirmation. You can't see it on this chart. You can see it on a 30-minute chart, I think, or a 1-hour chart. Hold on. Wait till it loads. See right here how you have the green? See how price is underneath the green? So you're selling that rip. You might even be asking yourself, how do you know if we're done selling the rip on a downtrend? Price gets above the hourly trigger. So you lay off of it, and then once we're back underneath the hourly trigger, we lay back into it again. When we have a pullback on sell the rip, so we're sell the rip, sell the rip, sell the rip, right? We get above the hourly trigger, you lay off it. We squeeze higher, come back underneath it, you're short again, right? So like, how would you know to lay off down here? Once price gets above that hourly trigger, we lay off it again. But this is the we're sell the rip, okay? So the daily trigger. We're not quite there yet, are we? So just right over here. And these are pullbacks, just so you know. This is a pullback. That's a pullback. Break underneath. That's a correction, okay? Pullback, correction, and then a crash can be assigned to a break below the daily trigger, or excuse me, a break in price below the weekly trigger. Let me rephrase that. This is a corrective movement. This is a corrective movement. That's all correction, okay? That's all a correction. If you break below with price, correction, right? If the daily trigger follows with that correction and has a break, you will be warned that this is no longer a correction. If like price is right here and you see the daily trigger coming down with it, I will warn you that we are not corrective and we are actually in market crash risk. And that would mean that we will trade in that warning that we have the potential to trade not just that, but further down to the quarterly down here, way down. Oh, it's not on here. It's actually higher. It's like right here. I think it's 380 right now. It's not a different chart. It's over here. That we could trade this 350 down here. So you'll always be warned by me. I'll always warn you and say we're in a pullback, we're in a correction, or we are in a risk-off scenario. If we're ever in a risk-off scenario, I'll let you know. I'll just tell you we're in risk-off right now. Get the fuck out of the marketplace. So right now, still no correction confirmed.
So we did see a report that Biden is raising oil drilling royalties and fees on federal land.
All right, I'll be right back with you. Let me take a quick break. I got to take a quick break. It's 12:04. I love all of you guys out there. Be back in just 5 minutes. Did the triggers give a warning in 2020? Yesterday, at the close at 4 p.m., I spent 45 minutes showing how triggers and velocity give you a forewarning of every single stock crash going back to 1894 before it happens, and that we can also predict the target price of that market crash to a pin. I'll be back with you in just a minute. You can go back and watch that video. It's on YouTube. It's on Twitter. Twitch. It's on Twitch and YouTube. If you, over the weekend, if you'd like, go back and watch the last 45 minutes of yesterday's broadcast. I proofed it for you. I called the crash in 2021. I called the bottom in 2022, and I'll do it again here. So, with 100% accuracy, every single time. What are you apologizing for? You don't have to apologize. Chris, you don't know me no apology. But you should go back and through and watch that video because we can show you every instance that happens and what to look for if it's going to happen again. We are due for a correction right now, though. I'll tell you that. We are due for a correction, but it's not normally in the time frame that you think it is. It's likely going to take, it's likely going to be a process to get there. 1 to 3 months to get to that point. It's normally not like one day. But you have forewarning. Hey, it's coming. It's soon. Really fucking soon. Prepare for doom. All right. Yeah. Maybe we can ask Binky to post that portion of the video on YouTube. Maybe you can cut out the last 45 minutes of the show and post it. How many people were here for that yesterday? Were any of you guys here yesterday or no? How many people was I talking to yesterday? I'll tell you what, whoever was here from 4 o'clock until 4:45 learned some shit yesterday. Yeah, definitely. It was badass. Yeah. Cool. Right on. So I showed you guys yesterday. I want to buy calls right now, and I want to take a break. I want to buy calls here badly. All right, I'll be back with you guys in just a minute.
At most.
Let's take the geopolitical part out of it, because I think we said the same thing about Ukraine, and it's still going on. So let's hope that we get through the weekend unscathed with anything that happens in the Middle East. But I think the bull narrative is intact, and I don't think we need any rate cuts. We want rate cuts. Rate cuts are great, but we don't need them, and the markets prove that. We didn't get one in March. We didn't get one we won't get it in May. We won't get it in June. The reason that the stock market can move higher is because of growth and earnings. Now, let's say that earnings don't deliver. We had great earnings today, and these stocks are selling off on news. If earnings don't deliver, then we should expect 8, 9, 10% pullbacks on these markets. But even with that, Scott, the longer-term bull narrative is still intact because the next move will be a rate cut. Whether it's this year or next year, I don't think they're going to be raising rates. I think we'll go into a rate cut cycle.
That's the argument that you and me had the other day, because I agree with Kevin Simpson. If the market didn't believe that, we wouldn't be where we are. Until that narrative changes, does anything really change?
Well, to Kevin's point, and the question I would ask is, how long can corporate earnings stay ahead of where rates are? Because it's the first time in history you had one of the quickest hike cycles in history, and in every other time with slower hike cycles, with peak rates being lower than where they are now, the economy has gone in a recession or close to it.
Sure, but you didn't go into any of those other hiking cycles with the amount of stimulus that you had in the system.
No, that's absolutely right. That's absolutely right.
That's been the greatest game changer in the history of this economic cycle.
Right. So now you've got to bet. Now you've got to bet on the next administration. Who's it going to be? If it's Trump, he says, hey, enough stimulus. Republicans are saying enough stimulus. And, we don't know if he'll live up to his word. That'd be a rare occurrence. But away from that, there's so many things you got to bet on. But if everything else is constant, I can guarantee you, okay, that the rates if they stay where they are for another extended period of time, that earnings are going to suffer. We've taken earnings down the most in advance of this earnings reporting period
by about
since
half,
2019.
right, in terms of where earnings growth is.
Yeah.
The other issue that I think we need to get into is what Michael Hartnett of Bank of America is talking about today, where he looks at their flow show, where he says markets are looking bubbly. And he looks at the price action of the market of when you have higher yields and then the NASDAQ also moving higher in the face of higher yields, that is typical of what he says is bubbly markets, points to 1999. No landing equals bubble risk, a period in which stocks lead yields higher, but also means higher inflation and cost of capital. So you have the largest U.S. large cap outflow since December of 2022. Amy, what do I make of that? Are we looking past the idea that yields have moved higher of late and the NASDAQ just keeps humming along? NASDAQ's coming off a record close.
That's the issue. I mean, and again, to Steve's point, if you expect rate cuts, you're okay, because then you're going to have the interest rates coming down, and that should help growth stocks. But if that gets delayed, with a market at 21 times and a large cap growth PE of over 30 times, and you're at a 5% Fed funds rate and a 4.5% 10-year, that gets to be a much harder equation. And I think that is sort of what we're seeing is some of this rotation under the surface.
To that point, there's never been a period like now where you've got growth multiples in the market in a very restrictive economic or interest rate environment. Now, it's obviously because of the stimulus, to your point, but you just have to understand how precedented that is, and precedents like that don't last forever.
Right.
No, but that's another reason why the Fed is mindful of that.
Yes.
And it's probably going to be one of the things that spurs them to cut rates. Right. They don't want policy to be too restrictive and too tight for too long.
Right.
Right.
Or they risk a major error.
Well, I agree with that. However, what's the biggest error? The biggest errors they've got to look at are what are directly focused on their mandate, which is employment. And we're at historically low employment, so they've definitely got room there, right? You could see unemployment almost double, at least go up 60% to get to around 5% or 6% before they really start to worry. Now, they won't wait for it to get there. They'll focus on the trend. And the other mandate, which I would argue is more important, is inflation. So they're not focused on avoiding a recession. They're focused on making sure inflation doesn't remain a very, very strong problem going forward, because that's what actually kills civilizations, what kills countries. And we've seen that in Latin America repeatedly. Uprisings because inflation there, not close to ours, I mean 100%, 150%, but you can't ignore it.
I'm going back to the Hartnett thing, Kevin. I want to talk about it because if you look at the growthy gains from the mega, it's not only the mega cap stocks, by the way. In fact, maybe it's everything but the mega caps within the growth universe. A lot of chips. I got software. I got AI plays. Micron's up 88% since the October bottom. Taiwan Semi's up 67%. Lam, Broadcom, Cloudflare, AMD. We're talking 70% gains in that universe. You don't want to look at those? Okay. Why don't you look at non-profitable tech? Why don't you look at some of the Cathie Wood type names that are in the ARC? That ETF's up 38% since the October bottom. Coinbase is up 265%. Robinhood's up more than 100%. Block, almost 100%. CRISPR, up 60. UiPath, up 41. Is Hartnett onto something?
Yeah, I mean, when you put those names into the conversation, bubbly is an understatement. I mean, it's crazy to think that these companies can have this type of return without any earnings to justify it. And if we look back to the October 27th lows, I mean, the market's up so much in 5 months. We don't get periods like this without a pullback, without some exhaustion. So I feel like the narrative that markets are frothy, that they're bubbly, is 100% spot on. And if you were going to be investing at all, you need to be investing in the profitable businesses. If I had any one of those names, I'd be a seller right now.
The other idea that Goldman's Tony Pasquarello puts forth today is the divergence between the movement in the mega caps and the idea of when you're going to get rate cuts, the implied rate cuts. So we're going to show you a chart which he sent out to his clients today And you can obviously see the tech basket way up while the number of implied cuts goes down. Now, he would suggest, Tony would, so that's reason why you need to keep your eye on the ball and basically go big or go home and Jim, stay in these stocks. You could also, however, bring this chart back to Hartnett, I think, and say, hey, look at that. Look how much mega cap stocks and growth stocks have gone up, even as expectations of rate cuts have gone down. Does that chart right there speak bubble?
To answer the second question first, I don't think I'm going to tug on Superman's cape today, at least, all right? So let's just assume that mega cap stocks in a slowing growth environment, mega cap tech is going to do just fine. But to the first part of his question, or at least what's implied in there, non-mega cap techs are going to have a hard time. And look, there's a simple, you can look at financials today, folks. Why are they laboring today? Even if you try to find fault with JP Morgan's earnings, it was still pretty darn good. Highly profitable company. I'm going to tell you Citigroup was fabulous and BlackRock are fabulous. Why are the stocks down? Very simple reason. We're going to have an inverted yield curve for longer, and that's going to weigh on net interest income. Now, again, nothing I'm saying is fatal, but what I am saying is that this is a hard time to step in today when on the back of this week's news, you're going to likely have an inverted yield curve for longer, along with higher rates for longer. It's just hard to get really enthusiastic about financials.
I mean, Steve, both what Hartnett is saying and what Pasquarello is showing can technically be true.
Yep.
Where Pasquarello says, hey, this is a reminder to keep your eye on the ball. Don't overcomplicate it. Look at what's working. That trend is intact.
Right.
Well, that trend being intact can ultimately lead to a bubble. If those stocks continue to go up as the implied rate cuts go down, that sort of flies in the face of at least part of what the market narrative is about.
Not if their earnings deliver.
Yeah, well, if they deliver, but even so, if the earnings deliver, I mean, they're assuming the earnings are going to deliver, and the sell in the news that we saw in financials, you could possibly see it in the mega caps unless they.
I would say that is unlikely.
Well, I would say because they typically they don't just beat. I mean, they really beat. But I'd be hard pressed to think of a quarter where the financials didn't sell off on the reports, despite really good reports. It just seems tradition.
Look at what JP Morgan did into the number.
Right.
What is JP Morgan? I don't have it right in front of me, but you tell me, what is JP Morgan up over the last 3-4 months?
It's traded like a mega
It's up a lot,
stock.
right? It's been around a new high.
Yeah.
Right.
Year to date, it's up near 9%. Over the last year, it's up 44%.
I know. Look, take the name off it. Take the name off, off Facebook or Meta rather, and tell me which one it is. You'd be hard pressed to distinguish between. But look, here's what I'd say. You reference like ARC, and that's like seeing a movie, and the second half is phenomenal, but the first half really sucked. ARC is still down from its peak of 140.
Oh, I understand that, but I'm
pop.
just looking at, if you want a representation of, whereas some are saying, hey, bubble, 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 look to the non-profitable growthy names that have gotten, I think, a lift, at least in part, on the idea of rate cuts.
Right, and I do think there are segments of the market, and you're pointing out one, that have bubbles. I look at bubbles where you get these valuations in stocks for companies that just don't have the fundamentals at all. I don't view Meta, I don't view Alphabet, I don't view Amazon as a bubble. I view them as slightly overvalued here, even though I own them, but yet they have fundamentals. So it's a question of they'll catch up to the valuation, whereas the bubble sector of the market that you're pointing to, and some of the SPACs that have even had a little bit of bounce, there is no catching up because they're up on air, and that bubble will get burst, and they'll go back down to earth.
I have in front of me, and I have on my FactSet home screen. Okay,
right.
Everything is red except for one name that jumps out at you. And it should jump out at you this week. It's Apple, because it's coming off its best day since May of 2023. So we're talking about nearly a year for shares of Apple, which have been sleeping now for a long time, wondering if they've now woken up. 175 pushing 176. It's been a minute since the stock has been above 170. It's been like 168, 169. You figure, okay, the chart looks terrible. It may be going down further. I don't know. Maybe not so much. Bill Baruch, he's our committee member, of course. He added to his position in Apple. He joins us now on the phone to talk about it. Why was this the moment to do that?
Hi, thanks for having me on. The thing that we looked at was everybody's made a really great point about the risks out there and how the puck is going to commodities and materials, and we were prepared for that. In fact, Apple was a casualty in preparing for that. So we were about half the benchmark, half the S&P's weight in Apple, and began trimming it when it was in the mid to high 180s. the news yesterday, I think, is what everybody has wanted from Apple this year that hasn't gotten it, is the innovation. Finally, something new from Apple. I think that's a very important point. And it held the October low. So what we're doing is moving back to get to the benchmark weight. The S&P is about 5.5% of Apple. We're now back above 4% from below 3%. And I see us adding more. I think I like to buy things when they're unloved. And Apple has been unloved. And if it does turn to have a good year, there is some room for it to run on a relative basis on the year. And the outlier here is if we start to see spending and services pick up in China, I think Apple could really pick up that as a tailwind as well.
You think this week is an inflection point then for these shares?
I do. I think fundamentally, from a narrative standpoint, are they innovating? And then technically, by holding that October low, 160 to 170 is a big level for Apple. And it's responded. I think you need to see buyers show up at that level, and they have.
Yeah, I mean, this stock seemed like it was destined to maybe test 160. And look, maybe it still will. But this is an interesting move to keep an eye on. We'll kick it around on the desk. Bill, thanks. Good weekend to you. We'll see you on the set again soon. So Goldman weighs in on this today. They trim the price target. They go to 226 from 232. They do reiterate the buy, though. Amy, they say any weakness is potentially an entry point. You know, Baruch obviously doesn't use it as a full entry point for a new position, but he says, hey, stock's down, I'll add to it.
I think it's a really hard call at this point. I still think Apple is expensive for the growth that it's going to put up. You know, even with the new innovation and new products, it's just so big. It's hard to grow that fast. It's trading at 25 times. We own it. We're underweight the stock. I think it's a great company, whether it's a great stock. I mean, Steve and I were talking about it. We were on the desk together when on the show when it crossed $3 trillion. It's now 2.6 or 2.7. And at that point, everyone said it's going straight to $4 trillion, like dollar market cap. I think it's fine, but it's not something that we're really looking to add to generate a lot of alpha in the next year.
And if you own this for China, all the news headlines, including today, it's going the other way. AMD, Intel, China doesn't want using them anymore. China is pushing their domestic phone companies. So that continues to be a negative and a major overhang. There's a reason why Apple manufactured 14% of their phones in India. It should be 100%.
Those who have written off, Kevin, as you know, Apple shares over time, have done so at their own peril because this stock has been amazingly resilient over time because of the installed base. Any perceived lack of innovation has been overlooked because whatever they missed initially, they've done better than most secondarily. Now they have the AI story to look forward to, and whichever core ISI says that they expect that story is going to unlock an iPhone super cycle. You've been adding to shares consistently, right?
Yeah, we're buyers of Apple. I mean, especially at these levels. I agree with what Bill said, with the exception of China. I agree with Steve there. That's not part of our thesis. It's not part of our narrative. But we exited the position in November at 200. So I see these price targets going up to 226, 232. If it just gets back to 200, we'll be thrilled. But they have $100 billion of free cash flow over the past 12 months. It might not be the innovator, it might not be the growth engine, but they print money, and we like that part.
Hey, you've been burned in periods of time of like, hey, if Apple gets down to this certain level, and then I'll buy it, and it never reached the level that you thought it might get to. You and a lot of other people, right? I mean, that just speaks to the resiliency of this name. Bill cites, what feels like it might be an inflection point this week. New innovation on chips. Now, you want to get more negative on Apple ahead of AI?
Yeah, I don't want to get more negative. I'm not going to buy. And what I said to you, and this is consistent with what Bill said, is that holding that support at 168, which was that October-November low, was very important. It did that this week, okay? And that is important. So the question is, why not buy today? And I just go back to where I am on the market overall. It's really that simple. I do intend to add to Apple, but I just find it very hard on a day like today, in a week like we've had, to put any new capital to work, and so I'm just not going to do it.
When you say a week like we've had, are you talking about for the overall market or a week like Apple's had where it's up 4 or 5% on the week?
For the overall market, because obviously I'll acknowledge and you'll point out Apple has had a good week and may well have inflected, folks.
Well, where do you want to add to it then? I mean, if you say you don't want to add to it on a down week, what are you going to add to it on a great week for the market?
Well, no, what I'm saying, thank you, I'll be more specific, is I think the market's going lower in the short term. And I think Apple will get caught up in that. It's been a nice week for Apple. I think Apple will get caught up in a downturn in the market of another 4 to 5%. Hey, if I'm wrong, I own shares. I may buy higher than here. I'll live with it, okay? But right now, my gut, my experience in the market says the market's going lower from here and Apple with it.
All right, so we got some new moves to get into as well. We're going to do that after the break. We do have some calls of the day to talk about. Kevin Simpson's made some more new moves. Steve Weiss has bought more of a certain name. I'll tell you about that and much more next.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Fitz Goolsby says Middle East instability is a wild card for the Fed in terms of oil prices and gas. A negative supply shock is not good.
Let's hit these committee moves I wanted to get to. So, Kevin, you bought Honeywell.
Yeah, we initiated a new position in Honeywell yesterday, Scott. We think with everything that Boeing's doing wrong, companies like GE Aerospace, Honeywell can be beneficiaries. They're streamlining a lot of the business. Aerospace is the key component to it, but I think they can also be a beneficiary of restructuring, onshoring, the infrastructure play. So 2.2% dividend, big share buybacks, solid dividend growth. It's been kind of a stalwart dog for a while too. So we're looking for something to break out a little bit here.
Okay, sold some calls in Freeport.
Freeport's been unbelievable. I mean, what we're seeing in gold and Freeport specifically has been fantastic. But the spike in volatility that we've had over the past 2 weeks is giving us opportunities to write premium. So if you have stocks that you're invested in, that are appreciated, I would take advantage of writing calls in here. We wrote a call for a $57 strike 2 weeks out. It annualizes out at 11% premium. And if that stock goes to 57 in 2 weeks, I'll ring the register, Scott.
All right. Weiss, you bought more Leidos.
I did. So, and we're seeing the stock up today. And the reason why it's up, it's really defensive. I mean, it's one of those rare companies where it's both growing and it's also defensive. And I use defensive in two senses of the word. Number one, it's got a defense business. It's about 50% of revenue. It's a $15 billion revenue company. And then they've got their civilian business. If you go through the airport, you see the scanners going through, TSA, and then it's got a healthcare business. But where I like them in defense is they're not a metal bender only. Okay, they are a technology company. You have new management coming in about a year ago. They're doing great things. The stock is cheap. This is one of my favorite holdings, actually, and I think it's going to keep moving higher and higher. So it's a pretty full position for me, but on dips, I'd buy more.
Okay, so Cisco is in the news today, Jimmy. It's one of our calls of the day. Positive Catalyst Watch opened at your favorite financial institution, Citi. Price target's 52. They do rate it neutral. What do you think?
Yeah. There's more than a little bit of a show me story here, Kevin. I know you're in the name as well. And the real question here is whether Splunk can reinitiate earnings growth here. I think it can, but this is definitely a show me situation. Absent Splunk, things have been pretty dull at Cisco, to say the least. A lot of tech spending has gone outside of Cisco's products, more to AI and things like Oracle and NVIDIA. So they really need that Splunk acquisition to start shining through here.
All right. Do you want to take Kevin? McDonald's lowered the comps at Loop Capital today. Unfavorable weather and increased competition are going to hurt comps, they say. 357, they maintain the price target.
Seems a little high on that price target, based on the news that they're talking about. Also, the fact that the stock can't seem to get above 300. So if you want to have a price target at McDonald's, I think 300 is a lot more appropriate than 357. We've owned it for over a decade. I like the stock. It's a great dividend compounder, but I don't know that I'd be rushing into it at this moment. And I think the price target's too high.
Weiss, you want to talk some Netflix with me? Because the price target gets bumped today to 700 from 600 at Morgan Stanley. Overweight is the rating.
They say a hostile
I'd be
aircraft
hard-pressed to think
location
a week
in
that
northern
went by
Israel near the
where some
Lebanon
analyst
border.
hasn't raised their price target.
Well, they had to. I mean, the stock's at 621.
Exactly,
okay?
exactly.
But still, 700.
Yeah,
Makes
look,
sense?
I mean, again, I think that, okay, maybe it's not overvalued because you've got a scarcity of a pure trading play here. That's the leading player in the world, that's profitable, that can grow earnings as much as they want. They still have tremendous leverage in their monthly subscription costs, which they've raised over the past couple of years, but still is below where others with less of a product offering are pricing their product. So at the end of the day, you're going to have two players. One's going to be Disney, and one's going to be Netflix of any scale. So I'm staying on board again. Maybe I'll get the opportunity in the next few days to buy more, but still a relatively small position.
Amy, let's talk some ASML, which you say you're looking to trim. The target got trimmed today to $1,052 from $1,072.
Very precise, yeah.
At Bernstein, they still rated outperform. Why are you looking to possibly trim it?
It's just had such a run. It's such a great company, but if you just look at the chart, it's a straight line up at this point, over 40 times. I think the story's known. I think all of semis have run and they've gone with it, and I just think the space is probably a little overdone. All
right. We will come back. We're going to step into some earnings next week, get you set up ahead of that. Mike Santoli with his midday word is right after this break.
Welcome back to the half. I'm Bertha Coombs with your CNBC News update. The Philippines foreign minister said in a meeting at the State Department today that his country will assert its South China Sea rights. Tensions have been rising between Manila and China over the strategic waterway. It comes after the U.S., Japan, and the Philippines met and announced new security and economic ties at a White House summit. A Houston, Texas hospital has stopped its liver and kidney transplant programs after it was discovered that a doctor allegedly manipulated patient records to make some of them ineligible for transplants. According to New York Times report citing officials, the Department of Health and Human Services says it is investigating. And a golden teacup worth 10.4 million yen, or about $68,000, was stolen from a Tokyo department store, Takashiyama. The teacup was taken from an exhibition event at the store, and the Tokyo police say the suspect planned and carried out the crime with the event in mind. He is yet to be found, or the teacup, which is made of 24-karat gold. Scott, back over to you.
All right, Bertha, appreciate that. Thank you, Bertha Coombs, our senior markets commentator.
Just want to check in here for a brief moment.
I'm sure there's a lot.
As it take a break. You still have a nice down move coming on an hourly or on a 1 hour basis here, so we should see a nice capitulation move down here in S&P 500. Velocity still not quite there. Should see some more blood coming up in just a moment.
As we race to highs, or let's say at least by the end of the first quarter, everyone knew we're due for a pullback. Now we got a lot of excuses for one.
Yeah, that's a good point, as always. I'll see you on closing bell, Michael. Thank you. Still ahead, we'll give you the trades on United Health and Genuine Parts, Taiwan Semi, and more. All of those ahead of some key earnings next week. There's the board. It's busy. We're back after this.
Analysts note equities falling at the end of a wild week on news reports around Israel as they are bracing for an unprecedented attack by Iran on government targets as soon as Saturday. So Treasuries climbed across the US curve as well as the greenback hit the highest level this year. A Wall Street so-called fear gauge, the VIX, also spiked to levels last seen in October of last year.
effect.com.
You just saw the Dow at session lows. I don't want to blow past that. We'll keep our eye there. We've got a sizable sell-off, which may be accelerating to about 41 minutes past the hour here. Let's talk about some earnings that are on the tape next week. United Health. Kevin, I'm coming to you on this. On a low note, too, because the stock hit a new 52-week low today. Has not been trading well at all. What are your expectations now?
Well, I would not be a buyer in advance of earnings. Now, full disclosure, I was a buyer last month at 470. To your point, it's 440, a 52-week low. But they've got they're taking punch after punch, and I'm very, very close to being stopped out of the position. I want to wait and see what the guidance looks like. If it's a sell the news event, we may be selling the position.
Yeah, I'm just looking at the Dow over Jimmy's head. The Dow, 38,000 even, just gave it up for a minute and just got it back. A lot of it, apparently, certainly what the narrative seems to be today is all about geopolitical concerns, Iran and Israel, and that has caused a spike in commodities, a spike in the VIX, and that sell-off in stocks. Yields obviously down on a flight to quality, too, a flight to safety into bonds. All right, let me get back to the stocks at hand here, but we'll keep our eyes on that. 454 or so is where the decline is on the Dow. So J&J is Tuesday before the bell. You sold it last week.
Yeah, I would stay away from that also. I have no expectations for J&J. I would not be a buyer into the print.
Okay, Jimmy, Genuine Parts, that reports next week. You own that?
I feel pretty good about it. I mean, we know that the average age of cars on the road is very, very old, and people are having to repair them. That should inure to the benefit of General Parts.
Weiss, Taiwan Semi.
Look, Taiwan Semi, they've got no spare capacity, so you'd think the stock, the earnings should be pretty good. However, the stock's anticipating good earnings, so the risk reward going into it, if that's why you're buying it for the earnings, I wouldn't do that.
Kev, P&G?
Wait till after the earnings. I think the earnings will be good, but I think the stock will sell off. You'll get a buying opportunity the week after next.
Another stock that's been around a high is Amex, right, Amy?
Yep.
Next a week from today before the bell.
Yep, we own it. I think it will be fine in the quarter, but I think it's really well positioned with high-end users and travel.
All right. We were going to take another break. When we come back, we'll have more on this sell-off. We're at the lows of the day. S&P's down by more than 70 points. The Dow's down by 450. Back right after this.
I am eating lunch. Give me 5 minutes. I need 5 minutes. I'm literally eating lunch. I'm here like 50 hours a week with you guys. Give me eat some lunch. I know, right? Like, let me eat some lunch. I literally wrote you. Here, hold on a second. All right, hold on a second here. I just got asked a question. I just got told, Cap, come on and help us. Let's whoa for a minute here. We're going to whoa here for a minute. Come on here and help us. Hold on here. Hold on 1 second here. All right. Let's put my, where's my camera at? All right. So someone just said, Cap, come on here and help us. Let's see if I can help you.
Always in sketches.
Hold on 1 second here. Let me mute this.
All right.
Okay. So this is last night's market brief. I'm going to read this to you. So the name of the game here is to stay hedged, get above 52.20, and build support, and feel confident to once again attack 5,300. And if lower support is lost, we will become sellers of the rip. What does this say? This is last night. Charts below. White line, expected path, right? Read that right there. White line, expected path. Can you read that out there? You guys can read that? What does that say right there? White line, expected path, right? Okay. So is this working? I don't know why it's not working. So this shows, I don't know why this isn't working. All right. Anyways, follow my cursor. I'm going to pull out this shows a quick rip up and a roll down here, right? To what? 508, right? Right around 508 right there. I don't know what else more you need from me. I don't know what else. I don't know how else to help you here. I think I even made a post on Twitter yesterday that said there's a bear trap. What do you got? What else do you want from me? I need to dance. Can I eat lunch? I mean, I don't know what else to do. What this shows it right here. Well, I don't know what else I need to do. Like, is that enough? All right, I'm gonna go eat. I don't know what else to do. I don't know how else to help. How else? I don't know. The white line is the expected path. We're there right now. So if you took the expected path, I mean, seriously, we're here right now, right? This is 508. Hold on, let me go back over there. Let's go look at the trigger screen. I mean, I don't know what else you want there, right? We're trading it right now, right? It's pretty close, right? The only thing I can tell you is, look for a dip to buy. Now, I would say one thing. I would make one adjustment here, which would be, I want to buy this, but I think we could possibly get down there. So, if we can, the deeper you want to take it, the better off I think we are. Or the cheaper you want to, the more dip you want me to buy, I will. So I don't know. I don't know exactly what to say to you at this point. I don't know how to help you. I want to help you. I just don't know how to help you. I don't know what else to say to you. I'm trying. So I would gander that Hold on, let me have a bite of this. Hold on. You can listen to me chew now. I don't know what else. I don't know. I want to help you. I just don't know how to help you. I would. So I don't know what else to say. All right, I'll be back in just a few minutes. Let me have some lunch. Back with you guys in just a little bit.
So just keep in mind at the top of the hour, 1 p.m. Eastern, I do see the release of the weekly Baker Hughes numbers. Rig count, the prior was 508. Total rigs, the prior was 620. After this,
Just let me get some food down my gullet here, and we'll come right back to you.
Fed's Schmid as well. Again, that's just around 40 minutes time there.
Couple of days, but even Apple, let's show an intraday of Apple if we could, because that, I said it earlier, of all the red on my screen, Apple was the one sticking out because it was hanging on a green. It looks like it could give that up before I finish this. Yeah, but my point is, it looks like it could give it up before I finish the sentence.
Right.
And it just gives you the kind of an idea of the kind of pressure that's in the market today.
Yeah, I think this is partially going to be a rotation under the surface away from the large cap growth stocks, more towards cyclicality. And I think if there is anything over the weekend and it does raise the energy price, you're going to see more of that.
Yeah, I can't stand CNBC either.
Okay, we'll take a quick break. We'll come back with finals on the other side.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
And 5 minutes away now to the top of the hour, we should get the Baker Hughes rig count numbers. Oil rigs and prior was 508. Total rigs prior 620.
Trial.
That's a scene from Al Arabia that Iranian media talks about an imminent attack on government targets in Israel within the next 48 hours. So again, this is according to Al Arabia, citing Iranian media now.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro for a year's worth of our service for the price of 1 month and save 92%.
Shortly expecting the results of the weekly US Baker Hughes numbers. On release, we'll lead with the rig counts.
What's next?
We're going to have a big one on the bell on this Friday, given this sell-off. We'll take you through the final hour, and we're going to do it with some good guests, too. Tom Lee will join me, along with Avery Sheffield, Bryn Talkington, Rick Heitzman, too. What does this do to the capital markets idea? Coming back, IPOs, what's going on in tech? We're going to talk to Rick Heitzman, the VC, about that, too. Let's do final trades. Amy, why don't you start us off?
Sure. Starting with Shell. It's we like the energy space in general, but Shell's cheap even compared to the others. 12% free cash flow yield.
Okay, Steve Weiss.
I would buy the 2-year. Now, look, I'm not sure if the yield's higher or lower today.
Yeah.
Just kidding, Scott.
All right, when you figure it out, you let us know.
It's a 4.9 yield. I mean, it's a great place to hide.
Amgen,
Kevin.
Scott, Amgen, 3.2% dividend, 14x forward multiple. They're getting in the weight loss game. We love the stock. AMGN.
Jimmy.
Scott, I'm just sitting tight for now.
All right, I'll see you on closing bell. The exchange is now.
Thank you, Scott. I'm Deirdre Bosa in for Kelly Evans, and here is what ahead. Big banks and energy are in focus today. Our market guest is bullish on both, but he sees a less than rosy picture for the broader market for the next decade. He is here to tell us why. Plus, Fox CEO Aaron Levy joins me right here on set. He sees AI as a job creator, a content aggregator, and a productivity booster, but he is warning of one thing that could get in the way. And you know him from Shark Tank or his investments across media, tech, and entertainment. RSE Ventures' Matt Higgins is also here. And fresh off my interview with former WeWork CEO Adam Newman, I will ask him if he would invest in Adam's new venture. But we begin with today's markets and Dom Chu with the numbers. Dom, we are drifting very close to those session lows.
Just about there right now, Dee, to your point. It's been deteriorating throughout the course of the last couple of hours here. And as Deirdre points out, session lows right now. I'll take you through the broader cap S&P 500 right now, which is down 76 points, down 1.5% overall at 51.23. So again, this is the session low right now. We were still down 24 points, even at the session highs. So that gives you an idea of kind of how far we've drifted lower to the downside here. And by the way, the level that a lot of traders are watching right now in the S&P 500 is 51.11. That represents the so-called 50-day moving average of the S&P 500, the kind of more medium-term trend line. So keep an eye on those levels. The NASDAQ composite really pacing the declines here, down 270 points. 1.5% decline, 16,171 for the composite. The Dow Industrials down 471 points, 1.25% to 37,988. Now, one of the big focal points that we're dealing with right now is in the energy trade. Believe it or not, every sector in the S&P 500 is lower right now, but energy is actually outperforming. It's only down about 0.5%. The energy sector spidered. The reason why this is important is over the course of this year, the energy sector is still the second best performing sector in the S&P 500 next to communication services. So we'll see whether that broadening trade still has some legs. Energy on that value side of things, something to watch. And analysts at Morgan Stanley have already called the sector attractive. They upgraded that kind of target for them. So keep an eye on that. And then big bank earnings season kicks off. These stocks have had a monster run for the most part over the course of the last 6 months or so. But J.P. Morgan Chase is now down 6.5%. One of the real drags on the Dow so far today. Wells Fargo and Citigroup each lower on the back of their earnings reports, which were, by the way, all generally positive, besides for some concerns about net interest income. BlackRock, the world's largest asset manager, also out with better than expected quarterly results, but it's down 2% right now. Deirdre, BlackRock, interesting, biggest asset manager. It now manages just around $10.5 trillion, yes, with a T, in assets under management. Something to watch, all some things.
Absolutely. We heard from CEO Larry Fink today. So his comments, all the more important because of how important that company is. Dom, thank you. My next guest manages a 5-star fund with energy and financials among its top holdings. Good time for that. And while he is extra bullish on some particular names, he sees a bumpy road ahead for broader markets, expecting zero on the S&P over the next 10 years. Joining me for more now is Cole Smead, President and CEO at Smead Capital. Thanks for being with us, Cole. Explain what you mean by that. Are we about to enter a completely lost decade for equities?
Yeah, the answer is yes, nominally. But the real danger for most investors, whether it be institutional or individual retirees, let's just say, is that the real returns are going to be worse. Okay, just to give you an analogous period, we think a lot. 2021 was like 1969. Today looks a lot like 1972. But regardless of whether those paradigms are perfectly identical, you went into a lost decade in that case where investors made almost 6% in the S&P 500, but they lost 4 to 5% real. If you look at the 2000s, they lost money nominally. It looks more like today, in my opinion, from a nominal return perspective. But they lost real money. Okay, so I just point that out because when we say that to people, listen, the S&P might make zero, plausibly will make zero in our minds. We're using the St. Louis Fed data, which they call the Fred data. That's equities as a percentage of U.S. household financial assets. The data just argues that when American households have a large portion of their net worth of financial assets in stocks, the forward returns are very poor. And like I said, this is higher than 99. That was a -1. So I might be being bullish when I say zero.
That is an extremely dire picture, Cole, because that is, the stock market, the S&P 500, is a wealth generator in our country. Where does the average person get a return? Is it the property market, which we know is under pressure as well? What's the average person to do here?
Yeah. The question is, should the average person get rewarded, or should the broadly diversified investor get rewarded? Because in those prior areas, they didn't. And I think the real myth that we're going to bust is that everyone's going to participate in the stock market, and they're all going to do just wonderfully so. Okay, we don't. There's a lot of areas where you see stock market failure left and right. So I would argue, to your point, the S&P 500 looks very unattractive from a 10-year forward perspective. Now, as you noted a second ago, we have 5% in cash. We're almost fully invested out there. So it's not like we're sitting there hoarding cash, because we're just saying the composition of the S&P 500 is going to be painful. But as the S&P owns 4% energy, we're making good money in the energy business, and it seems to be that the large institutions and passive owners.
Hey, just a heads up here. There might be a fair chance of some option grind here. So if you are a bear, be careful of
zero. I like my odds.
If you're a bear, be careful of like a sideways move and then the last down move over here.
But if you held tech,
you don't want to get caught in this and have all of your puts destroyed.
And the mega caps in particular, you would have done very well. And right now, there's a thesis that many people share that artificial intelligence is going to underpin gains for the next decade plus. Do you completely disagree with that?
Well, no. See, I think where people are wrong is if you
I think we enter
unit volumes go way up.
Diddle in the middle phase.
Price per unit,
like Mr. Yen says to you.
If you just look out at businesses in those spaces, in the long run, as the technology grows, margins decline with it. Okay. And so I just point that out because I look at AI, it's like, it'd be like when the tractor came about. It's wonderful technology. We were going to greatly revolutionize agriculture in that case. Or if you were the caveman, you figured...
Jesus Christ. Now there's people on CNBC. This fucking clown is like lost decade for stocks. Does this motherfucker know where stocks are right now? Like, these people are out of their fucking skulls. Or I guess maybe I'm on that trade that happens, but it's not today. They're calling it like today.
1990 for that matter.
So you hold on, Cole. I need to question you on this. So you don't think the gains made in artificial intelligence are going to be reflected in technology stocks? Is that what you're saying?
No, I'm saying that the predictions of profitability off of those are likely to be underwhelming. In other words, just to get to where the expectations are right now, they have to do miraculously and marvelous things. If I was going to give you the 2021 example of this, it was DocuSign. Miraculous, marvelous.
So we should have a lost decade for stocks, but you don't have to worry about that right now. I don't know why this guy is like trying to panic you in today. Oh, it's a down day, so he's like, yeah, you know what I mean? You're so fucked right here. And I'm like, no. Yeah, they're just trying to make headlines. There is a potential of that happening as we come into the end of this housing cycle, but the end of that housing cycle is in like 2026. So, I mean, you're talking about where could we be from today into at least December or March or even 2026. This guy's way early, way early. He should say that. He should be like, I wouldn't be doing this right now. A lost decade of stocks ahead.
That has been priced in more so. If you look at the bank reports today, the banks that benefited from deposit flows a year ago are the ones that are having a little bit of a tougher time holding net interest margins, because those deposits, unless lent out at a higher rate, aren't going to help you. So they've taken on a bunch of deposit costs, but they don't have a lending window opening to cause them to be able to go out and earn money on that. So, we've owned JP Morgan and Bank of America for a very long time, in both those cases over 10 years. We got involved with the regional banks last fall because if we can buy mid-teens return banks and they're trading for below book, do we have a plausible outcome to make good money?
So it's a valuation thesis, it sounds like. Cole, I wish we had more time. Very interesting thesis. We'll leave it there for now. Cole Smead.
Yeah, appreciate it.
Let's turn to the other side of finance. Bitcoin has risen over 50% since spot Bitcoin ETFs began trading. Our next guest says increased crypto volumes could help Coinbase. He raised his price target by $61 today, but he still has an underperform rating on the stock. Joining me now is Dan Dolev, Managing Director at Mizuho. Dan, it's so nice to see you in person.
Welcome to the East Coast.
I think I last saw you on the West Coast. Longer term, let's start with Bitcoin as a whole.
Yes.
Does it behave like a growth stock or a store of value? That's really like the crux of it. And so far, we've seen it acting like the latter, right?
Right. I mean, right now it's doing well, but I still think that longer term it has no yield support.
Right.
It's basically just FOMO. And I think eventually it's going to go down. I think eventually this is going to unravel, that there's really
Bitcoin
nothing
as a
there.
whole.
Bitcoin, yeah.
How low does it go?
I mean, I see no value in it personally, so it probably goes back to like the 40s or 30s easily.
Oh, 40s or 30s is only, it's not as bad as below 20.
It could get there too.
Okay.
It does go back to the 40s and 30s, but it does have range expansion to 85 or 84,000, 80,000, somewhere in there.
That the hodlers have won. They won Q1, so the volumes were just so strong. Consensus is underestimating, what they're going to put out in terms of revenue by 40%. We had to take up our, revenue estimates and EBITDA. And just to be fair, we had to take up our price target, but we still see massive downside from where the stock trades today.
Right, which is your broader thesis that Bitcoin eventually goes.
Bitcoin goes lower.
Down, yeah.
Interest fades, and take rates, which is kind of what they earn, are going to come down with competition.
It feels like we've been talking forever about how Coinbase has been trying to diversify its business. How successful or not successful have they been in the last 12 months?
Not really, right? So it's basically still just Bitcoin, and also all these altcoins, all these yield supporting businesses are not really taking off whether it's staking, et cetera, those remain very small and insignificant.
Okay, let me just ask you, because
Yes.
your take on Bitcoin is interesting. Gold, then, do you believe gold will continue to go higher?
I mean,
That
it's
is
been
the store of
around.
value?
Yeah, that's probably been around. I mean, I personally believe more in real estate. You had Adam Newman yesterday here. It's probably a better call. But yeah, I guess gold, I mean, we're used to it. People can, we have like a predisposition to like it. I think Bitcoin is right now purely driven by FOMO.
Okay. Bank earnings, because we saw in this morning's earnings from JP Morgan and some others.
There's Bitcoin for you.
Deposits. Good overall, but at least the beginnings of some weaknesses in deposits. Customers are shifting out of zero to low interest rate checking.
You want to take a look at that right there?
Into higher yielding products like CDs, but you and I talk all the time about the fintech companies. You've got SoFi, you've got Robinhood, a number of other ones offering way higher APYs. Even my Apple savings account, I think it's 4.5% now. Are they benefiting?
They're benefiting, and I think like specifically on SoFi, which is the bank that I cover, what they're going to do this year, again, my bet, they said that they're not going to grow personal loans. They're going to actually do the opposite and boost personal loans. The stock's going to rip. So they're getting massive deposits. They're giving you $2 million of insurance. They're getting a lot of people coming in, and they're going to offer these people personal loans. That's what makes SoFi such a good idea.
And is that in relation to more regulation coming down the pike for the big banks? Is their win sort of a loss for the bigger banks?
I think their win is the loss of the big, 100%, absolutely, because people don't need to go into the branch, and SoFi offers kind of no branch banking, and they have a great brand. They've got the stadium. What's not to like?
Right, but historically in the stock market, right, they still have a lot of ground to make. A lot of these fintech names haven't lived up to those promises. Right. So is that reflected in their stock price? What's going to be the catalyst? What you just said?
So I think the catalyst, yeah, it's a great question. I think right now the stock is really depressed. I think it's $7. They have a $12 price target. What's going to happen? Again, I don't know, but if they actually boost personal loan growth and extend more loans, even though they said they're not going to do it, that's going to create up to 10% upside to consensus revenue and 20 to 25 upside to profitability. That's the catalyst.
Talk about those profit margins, though, because when you offer, 4.5 or 5% APY, that eats into those margins, which is what the big banks have over the fintechs. Do we see more profitable fintechs? Or do they lower those rates?
No, I actually think that I think for SoFi specifically, when they issue or when they originate a personal loan, they get paid immediately, like 5-6% on the loan. So they get $2,000. They make $2,000 on a $30,000 loan immediately, and that's what makes the profits so rich.
Interesting. So that could be a theme for the rest of the year. We'll keep an eye on. Dan Dolev, thank you for coming in.
Thank you.
Appreciate it. Dan Dolev, Mizuho. Coming up, it's the age-old question: will artificial intelligence cut jobs or create them? Box co-founder and CEO Aaron Levy is here to make his case for job growth, with one major warning for corporate America. And from AI to VC, venture capitalist and Shark Tank guest judge Matt Higgins has a billion-dollar portfolio spanning nearly every sector in the market. He's going to join us with where he sees the most risk and the most opportunity, and how higher rates are playing into his investing strategy. Before we had to break, here is another check on the market. Stocks are still near session lows. The Dow was down 500.
Just pay attention here. I want you guys to see this, right? Got a little bit of curving going on with the 1 minute trigger, just starting to turn a little bit here. Don't get caught in the middle here. Even if we take the next leg down, you just don't want to grind yourself out right here. And it's already happening. That's the second time I've warned you of that. Don't get caught in the middle. Don't get caught in the middle.
$65 counterparties take $407.322 billion at the Fed Reverse Repo operation.
Also note that there's a new low on the half-hour bar on the VIX 9-day. That's a good question. That's a good question. I'll stop in for that. Hold on a second here. That's a very good question. So, diddling in the middle is. Can we explain this better? Okay, hold on. We'll talk about this. I want to make sure you guys all understand what that means. Okay, so when you see directional movements up or down, or reversals, little lesson here for you. Price takes breaks, like what? Stop. Are we gonna go up? Sideways. Down now, right? Down, right? Hold on here. So that consolidation phase is called, I call it the finger trap. Other people call it different things. Mr. Yen famously calls it diddling in the middle. It's a great term. It's not mine, but he's taught it to a lot of people. So let's say price comes down, okay? Say price is coming down, and it pauses. And you see a back check up here, right? Then it comes down. There's another one right here, 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 right? It's called getting stuck in the middle. And there's some problems with this. You don't know which way it's going to break, number one.
More than 50 missiles were launched from south towards northern Israel.
Oh, shit. Be very careful here. Warning to you. Warning to you. Says 50 missiles were launched to Israel. Be very careful here. There's reports coming out of missiles, 50 missiles being launched. I don't know if these are small missiles, big missiles. Before this lesson, give me a second here. I want to check the news here really quick.
Israeli media says more than 50 missiles were launched from South Lebanon towards northern Israel.
Warning to be very careful out here. Now, you don't know if those are big missiles, little missiles. Be really careful here. As this news hits the wire, or the not what news from the wire hits the market.
Trades from Macro Headline Risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Not seeing anything on Twitter yet. It might be coming out from News Squawk, or not News Squawk, from Trade the News. Let me check Trade the News really quick. Hold on. I'm not seeing any confirmation anywhere yet. Whoa, definitely looking lower now. Hold on. Didn't sound like rockets. Rockets are different than missiles. Hold on one second here. Having some issues with my control arm today. Okay, let's go back down and take a look at this. So, all right, so we're going to go over here, trigger screen. I'm going to make this fast. Okay, so we're going to do a really quick lesson here. Some people in the audience don't know when I say don't get stuck in the finger trap, don't get stuck in the consolidation zones. So if price comes down, okay, or if price goes up, it does not go up in a straight line. I know that some of you think that it does, but it does not. Price will take a breather, consolidate, and then make a decision if it's going to move lower or higher, okay? Same thing when price is going down. You'll go down, and then price will stop, consolidate, and decide if it's going to go up or down again, right? This is called diddling in the middle, finger trap, whatever you want to call it, doesn't matter. Call it whatever you want. Make up your own term for it, whatever you want to call it. This is important right here because there could be a reversal, right? You could be down here. I got puts. Woohoo, everything's awesome. Consolidation. What happens in here? Number one, they start to burn your calls or your puts. Number two, you don't know if we're going up or down. You don't know where we're going, right? It's a place where you could be buying calls, you get reversed. Bye-bye calls, everything is bad. So you want to be trading in between those things. Now, you can do this on every time frame, 1 minute, 5 minute, 15 minute, a day, a week, it doesn't matter. So if price is going up on a daily basis, and all of a sudden we park sideways, what happens in there, right? You could wind up burning all your calls, right? You could wind up reversing to the downside, burn all your calls. So this is not the place for you to be hanging out, is it? Now, there's some things you can learn from this or gain from this. So let's say price is heading higher. And you come into consolidation. And you begin to consolidate. This is what you need to know. So in here, as price is consolidating, and you're unsure if it is going to be consolidation or distribution, consolidation would mean we're going to continue higher. Distribution would mean we're going to continue lower. So as you enter this area here, you want to get rid of your calls in this instance. Same with puts. Get rid of your puts, doesn't matter. Time frame wise, right? You would exit your trade. Yahoo, I made my money. But what are you looking for thereafter? So inside of this consolidation or distribution zone, what you can look for is either a break higher or break lower. In this case, we'll look at a break lower. You'd see the break lower here. You now have your new low. You should come back up again. Why? right? And what are you looking for in that break higher? You're looking for, are the buyers still there? Are they strong or not? If they're strong, you'll go right back up in here, right? If they're weak, what will happen? You will only go to this box just right here. That's it. So if these buyers are strong and then you find out now that they are weak, you would be looking for a new low, wouldn't you? Right here. Prior low, new low. The moment that you see that new low, it's telling you that the buyers are no longer here and that they are lower on the chart. So if you saw the new low, you would be Johnny on the spot waiting somewhere right here. And you would see one more, oh, sorry, I'm a bull and I'm sad. Johnny on the spot, boom, to the downside. This is where you make your money. Trying to guess inside of here is a low probability trade to the up or downside until you get more information. Now, let's say it also gives you places to put stops on, doesn't it? Right? To take it to the downside. You're setting up over here. You're not taking the put here. You don't know which way it's breaking. You don't have enough information. Shit. So let's say we come up, we pause, and begin to consolidate or distribute. As we create that distribution or consolidation line, you get the initial breakdown. But the bulls actually show up. Whoop, right back up in there again. Well, shoot, now we know the bulls are probably here, right? They're probably here. If I was a bear, I'd be like, oh, shit, the buyers are right fucking there. We tried to send it down, and they bought it all back up like it was nobody's business. What would be the expectation where you did not get the second low, that we're going higher, right? So you'd likely see at that point the bulls try to make a new high. And this is now your previous high right here. They made the new high, right? So you're Johnny on the spot again. And you're watching for one more thing, that new high right there. Because you still haven't broken out yet in here, but up here you have. Now you get the new high. It's just brief. Comes back down. You're Johnny on the spot right here to take this trade to the upside. Anytime you see somebody trying to get long or short inside of these boxes, it is a low probability trade. Inside of this box, any direction is a low probability trade. Low probability trade. Now, there are some things that you can look at that can give you hints as to what will happen. Let's say price is on its way down violently. And then price starts to slow on its way down. And then price starts to do this. You can see here that we have velocity and price going down. You can see that velocity and price going down is slowing. You can see we're now in consolidation. Excuse me. What else can you use for a hint as to what's going to happen? Your 5-minute trigger and your 1-minute trigger, right? You've got the 5-minute coming down. You have the 1-minute coming down, right? Violently. You start to see the 1-minute flatten out. Oh. You begin to see your 5-minute flatten out. And if you do see the 1 minute cross to the upside, this is a hint to you rather than the 1 minute crossing down. It's a hint before it happens that you're likely going to break higher. So what you will see is price in this middle zone fight to go higher. Boom, up here. Boom, up here. And then a break above and back check. You're Johnny on the spot right there, right? Woof, back to the upside. Okay? So you're looking for a series of crosses on, let's say, a 1 and 5 minute basis. You're then looking for crosses on higher time frames, an hourly trigger and a day trigger. So if you see this on a higher time frame, let's say a 30-minute chart, 1 hour chart, a day chart, and you're tracking the hour trigger and the daily trigger instead of the 1 and 5 minute on the higher time frame basis, you can actually predict price action farther out in time on that time frame. So a 1 and 5 minute trigger is good for a smaller time frame than an hourly and daily trigger. You can say, I expect price to go up or down on the intraday basis with a 1 minute trigger and a 5 minute trigger. If you're trading a week, you can say, or a month, you can say, hey, prices are above across on the hourly and daily trigger. I expect us to go up for a week or until this price. Make sense? So you're looking for the velocity in the 1 and 5 minute trigger. Is it strong to the downside? Is the 1 minute trigger flattening out yet? It isn't, is it? Look at it. It's violently going down still. If the 1 minute trigger starts to turn here, and then all of a sudden you see it cross the 5 minute trigger. See the 5 minute starts flattening out, and then you see the 1 minute trigger turn around. Even though price is down in the dumpster, you will see price come back up like this and begin to turn with the 1 and 5 minute trigger. You can then take a safer trade, 15% chance, 30% chance of winning, and then all of a sudden 45, and then on a back check over here, you're like a 65% chance of a reversal.
Said better balance in jobs.
You can take that trade with confidence.
Of monetary policy.
In this case, until we get to the hourly trigger above. Make sense?
Fed Schmidt says, I would like to see a much smaller Fed balance sheet.
So right now,
the Fed to tolerate interest rate volatility, wage growth signals ongoing labor market imbalance, and the bank reserves abundant and Fed balance sheet cuts are not causing strain. Job sector is strong and the economy is growing above trend. Inflation levels are still too high. Economic resilience creating monetary policy uncertainty. And Fed Schmidt urges patience on interest rates until clear inflation is ebbing to 2%. Large Fed balance sheet depressing market rates.
So right now, before that missile news came out, price was looking like it wanted to squeeze up and consolidate in here, right? For a reversal to the upside.
You want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up.
We don't diddle in this zone, do we? We don't take trades in here.
The price of 1 month.
Bad taking trades in there. Don't ever want to get stuck in there. Why not? Because direction becomes unclear. And if you're in options, it's a good place for your options to go to die. Bull or bear does not matter. Does not matter the break in direction either. Can I recommend literature for absolute beginners? Yes. You can join us in our Discord and we will teach you. I have educational videos on our website for members to teach you. And I got a better one for you. Yesterday, we just beta launched our website we had a meeting yesterday, in the next week, within a week, we hope to have mentorship programs one-on-one for all of you that want it. So in the next week or two, we will be launching a mentorship program for people to learn this stuff from step one. All right. Good questions, by the way, out there. Good questions out there, by the way. All right, I'll be right back with you. Gold getting annihilated right now. How was that trade for you out there? Did they blast that gold down or no? Bye-bye, gold. How's that gold chart looking for you out there right now? They just sent gold right down to the fucking dumpster. How about that gold charting? They just sent gold down to the depths of hell. You can get all of that stuff on the 32. If you sign up for the year membership for the supporter level, you get updated manipulatable charts with the triggers for about 10 or 12 tickers, like the indexes and all the text stuff and meme stuff. Twice a day updates that you can manipulate to at least so that you at least know where the triggers are and where velocity is. If you want full access to the suite, it's as a pro trader. But you can get access on the supporter level to manipulatable charts on the website twice a day, in the morning and afternoon. I really want that down there. I want that one last little bit. I don't know if they're going to give it to me. Ooh, that one right there's nice too. Where's that one? That one right there. That's that 508 down there. That's 506 on SPY. I don't know if they're going to give me that one, but I want that one if I can get it. This is 508 on SPY. This is 506 on SPY. Let's see now if SPY can begin to consolidate here. All right, I'm back. Hold on here. All right. So just a few heads up here. You've got a band of down below. I'm going to try to take a trade here with you guys. Where was it? Where am I at here? Main screen. Can you guys hear me? Okay. So we're going to try to take a trade here with you. There's a few places I want to talk to you about that trade. Looking for a turn to come up here. Not quite there yet. There's a small low down here to be looking to grab down here. There's another low down here to buy. So try to buy this, trying to buy this right here. Now, if price improves, I'm going to show you what that looks like in just a moment, okay, if price improves. This will be the third place. This will be the third place to take a trade, depending on what happens. See something like this. Something like that. Something like that. Something like that. If I see that up here, I'm gonna jump on a trade with you. And I'll be buying that right there. And that'll get us a nice little push up to right here. Nice little push up right about there. Nice little push up there. So I'm going to be watching the development if this turns around. Now, if it doesn't, it blasts down. Let's say it gets down. Let's say this does not happen. It just reverses down below. We'll do the same process again. And we'll do the same process down here again. Now, I do want you to know that I don't know if I'm going to put on 0 dates. I think I might be putting on some monthly calls. So I think I'm going to look on the May 3rd and add some more to the 530s. So let me take a look at that options chain. Just take a peek. I'm looking at 100 contracts for May 3rd, 530C. I already have a bunch of contracts, but I'm going to look for another 100 down here to add to this position. And the other thing, too, that I got to think about here is can we get to 530? And also, I already have 530s. I might take 520s. I'm not sure. Rather than have just all concentrated on one strike, maybe go to 520. But I'm looking for some time on it. Right now we're on April 12th, so we've already gone through like a half of the month. I'm down a little bit on my position right now, but not much, like 20 cents or something. So my position's holding up quite well right now, and my position has been green like 3 fucking times, and I haven't sold because I'm looking for that break higher. I'm looking for a payday, like big money. So I don't know exactly what to do here. I might just stay in the 530s. I might take 520s. It's another good thing here would be to buy a call spread. You could do a call spread that's May 3rd or something like that, and cash them out at like 30%. It's a little bit safer too. You can even put more time on them, put June or something like that. We're looking for a reversal here, and I want you to think about something, okay? I want you to think about something here. I want you guys to like get off the fucking 1 minute chart for a minute. Like breathe a little bit here. And just look back here. And May 3rd is way over here. You know, you're trading something that's over there, and I'm looking for something that's over here, you know? I'm looking for a big old fucking squeeze. Got a nice, gorgeous little thingy going on there, right? Measure that thing, and you're there. So, all the doom and gloom that you guys are trading like 5-second charts at home, 1 minute charts. You gotta like ease off a little bit. Let's look at the 1 hour really quick. Let's look at the 4 hour really quick. And this has been nice places to buy. A lot of money made in here. So we're on the low that we haven't seen since the 15th. So you guys got to breathe a little bit out there. You guys are freaking me out here. Is it time to sell the rip? I'm like, what are you talking about? Like, you don't even like if we're selling the rip, we're going down like 300-400 points. You guys are trading way too small time frames. We're not even near sell the rip, and we haven't even sold down anything. Like, you want to sell the fucking rip, like, we're going to go down like 300-400 points. It's going to be a nice doozy. So we are turning around right now. Do you see us turning around? We're now above the 1 and 5 minute trigger, and we caught a new high. We got a new high, like high, new high, new high. Next target's right here. Matter of fact, I'll draw it out cleaner for you so you can see it. I'll just put a bunch of stuff up here. You guys are savages. You guys are like chomping at the bit. Hungry. Bunch of savages.
Fed's Schmidt says we're at a bumpy stage now with inflation.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
The spread's growing larger right now. No fill yet. They want fucking $4 for 520. See, I'm like, fuck you, no way.
Reason to think rates will stay higher for longer.
$5 for 520C for May fucking 3rd. Fuck you, no. A generational buying opportunity right now. You don't know that? Generational buying opportunity. This is for a 0-date trade. If you are looking to trade gold, any rejection below 23.20, and you want to get out of that trade if you're looking to buy down there, looking to buy gold. Also of note, there's one more note I want to give you guys on this, which would be, I'm going to move this to the side, okay? Or over there, so you can see the price action. The other thing, too, would be keep your eyes on the gold close. You're likely going to get a single red candle. I didn't think that gold would fall that fast. Listen to me closely if you're a gold bug out there. I didn't think it would fall today that far. Now, it's either price or time. The stark turnaround on gold, if the closing bell today, there's a red bar, a big one, you could see 22.32. So we're at 23.20 is where you want to be a buyer, but you're talking about another 100 points down if you get one single red candle on the day, a big one. That's when you get scared on gold. If you get like a one big fat red candle on gold, like a tweezer, it's called a tweezer candle, I think. It's called a tweezer candle. I don't know the fucking names of candles anymore. Sometimes I know them, sometimes I don't. Like I don't remember that shit. Like, dude, that's an inverse morning star doji. I'm like, I learned that shit like 10 years ago. I'm like, I don't remember that shit. He did say generational buying opportunity. Good. It is. We're right there. And my point behind this too is when you scale out a little bit, right? This ain't gonna matter to you in 2 weeks. Like, we could bloodbath it down and swing right back up, off and running, and you'll never even know it. So whatever your poison is, either your poison's here, or your poison's here, you do whatever you want. You could wait until we get above the hourly trigger. That's the best thing you could do, believe it or not, is wait for the hourly trigger, price above the hourly trigger, like up above this is the safest thing to do. But, you do you. You shouldn't be copy trading me ever. I want you to know that out there. I know some of you try to copy trade me. You shouldn't be copy trading me. This show is not built for you to copy trade me for a bunch of reasons. There's a delay in the stream. You have your own risk. You're likely not taking every trade that I take. As a matter of fact, I'm loading up on this ticker called RGF. And you guys aren't doing that. I take trades that you guys don't take all the time. I don't even tell you that I'm taking that trade. I don't even talk about it on the stream. So I want you to always be trading. I want you to do a few things. Especially if you're a losing trader, I want you to trade your own plan. I want you to learn these basic tools. I want you to get involved with the community. I want you to, if you don't like trading how I trade, I want you to find other members in the community and say, hey man, I want to trade futures. Hey man, I want to sell calls or puts on stuff. I want to run the wheel. I want to own stock, and find what fits you best. You shouldn't be, when I learned how to trade, right, I would find somebody and learn what I needed to learn, and find somebody else and they'd teach me something, and somebody else teach me on something. And now I trade what I like to trade. And you should do the same thing. We have lots of people in our Discord in this chat that you can meet, and just reach your hand out and say, hey, I want to learn how to buy stock, or get in the Discord and say, I want to learn how to trade crypto, or I don't know, I like fixed income shit, or I like dividends. Binky loves dividends. Just ask around and say, who does dividends? And you should be, like learning different strategies so that you are beholden to yourself. Because I'm going to tell you something. If you're in here trying to copy trade me, you are ultimately responsible for your own trades. You can't be like, oh, I followed 3 of the 10 trades. I fucking hate my life. Can't do that shit. Or Captain bought calls for 10 cents, and by the time I heard it, right, there's like a 3-second delay, then I heard it, then I fucking set up the trade, then I executed it, I bought it 20 cents. He's exiting now at 25 cents and turned around on me, so now I'm in the red. Like, you shouldn't be doing that shit. Don't be copy trading people. You really need to learn the mechanics of when to enter, when to exit, manage your own risk, all of that stuff. I can't emphasize that enough to you. I really, really can't. Another thing, too, is to be like in your own trades and listening to me here. That's what I really want you to do. Like, hey, I'm in a trade. I'm in Apple right now. Is it going down to the dumpster? I'm in AMD right now. Is that going to the dumpster? That kind of stuff, We are, though, starting a trading account here with Robinhood. I don't know if she put the money in it yet, but I'll have to ask her today if she put the money in it. But I asked a producer to put $1,000 inside of a Robinhood account. So we'll manage that account together, and you'll see how to grow a kind of account 3 different ways.
From Fedspeak, who gives a speech and participates in a moderated conversation on housing at the Confronting America's Housing Crisis, Solutions for the 21st Century. Text and Q&A are expected.
But you shouldn't be copy trading that fucking shit either. That's an educational tool for you. Those things might blow up or they might not blow up. They are meant for you to learn how to build an account in a risky fashion and in a conservative fashion. So we're going to do it 3 different ways, and you're going to see what it's like to grow an account in both 3 ways. You shouldn't be like, oh, I'm going to trade exactly what that Robinhood account trades. You shouldn't be doing that shit. You should be trading your own account, taking your own risk, managing your own risk. And you shouldn't, like, let's say I take a trade for 10 cents and I, like 2 days or 3 days ago, I go, I bought like 19-cent calls, I think. And then I bought like 9-cent calls I DCA'd. And I said, I'm going to sell them at 40 cents. And I sold them at 40 cents, 200 contracts in total. Now, you might only want to take 5 cents. You might want to take 60 cents. Now, I think they reversed at 42 cents, but you need to learn those mechanics for yourself. Like, what risk do you want? You need to do that. I got to beg you to do that. And I'll tell you something else. I used to be kind of like when I first started streaming, I didn't know. Like when I first started streaming, I'd be in the stream and we were only streaming on YouTube. That was like a 15-second delay. I was taking like trades. I was taking trades like this on stream. I would like enter a trade right there, exit a trade right there. You'd be entering it right here. You'd be exiting it over here somewhere. Right? So people were like, what the fuck is going on? Why is he in at 10 cents? I'm at 15 cents. Why is he exiting at 15 cents? And we're now at 20. Now we're at 14. I'm at 12. I had to stop that shit. I stopped trading that shit with you guys because of that. So just like, don't do it. Don't just like learn. You're here to learn. You're here to or you're either here to learn or you're here to bounce your own ideas off somebody else, or you're here to have a friend with you, or you're here to gauge sentiment. Hey, what do you guys think's going on? What does Cap think's going on? Are we in sell the rip yet? Or are we in buy the dip still? Like, that stuff's all great and cool. But you guys, over time, need to be learning. Like, you know what I mean? Like, gauging sentiment, developing your own trading habits. Because, like, what if I'm not here tomorrow? What if I get sick or break my leg or get in a car accident or something? What are you going to do, right? How do you manage a trade? How do you hedge your trades? Up or down, doesn't matter. So you guys need to do that for yourselves. We're all adults, right? We're all like adults managing our own risk. Oh, what's that? I forget that movie. What's Mosquito Coast? I didn't see any of the other talking, but I remember that movie, but I haven't seen it. I'm only here for the occasional bear music. What was that movie about? Yeah, Winky, I was thinking that, man. I was thinking about that, brother. I was thinking that they're going to try to blood it right down to the bell, dude. That's what I was thinking. I got some calls in for like $1 though. I haven't been a fill yet though. Like 5:30 C. I'm hoping I can catch like $1. I was thinking that too, man. Yeah, you need to be thinking. When I tell you guys about this stuff, you should be thinking before we get to the trade, right?
2:30 p.m. Eastern Time, we expect comments from Fedspeak, who gives a speech and participates in a moderated conversation on housing at the Confronting America's Housing Crisis: Solutions for the 21st Century. Both text and Q&A are expected.
So, like, we're like, so when we're coming down like this, right? I'm telling you what to look for. You should be looking for this yourself, right? Before I even say it to you, you should be like, oh, yeah, Captain's right. It's turning around right now. Going to execute a trade right here, right? Before I even say I'm long, you should be like, I'm already long, Cap. I already took it. I'm already on it. I'm already on it, brother. You told me 10 times how to take those trades. I don't think you've seen the lows. I'm with Winky on this. I was already thinking it. I'm like, what time is it? It's 2:30 in the afternoon. So you know what they end up doing here is, or what often happens is, you see people leave the market. There's 6 o'clock. They like wrap it up for the day. So we end up seeing is something like this, right? You come up here, you catch the failure, right? They stop you out right here, right? Like 3 o'clock, they stop you out. And then they go like this. They psych you out, and then boom, right down here. And the actual buy was like here at like 359. It's like, yeah, we're going to go up. We're going to go up. But instead, it's like boom, boom down here. Boom down here. You're trying to DCA for a run up. And they just blood you down. The real buy was right there. But I'll tell you what, you put enough time in those calls, none of this shit's going to matter. Put some call spreads on or some shit, that shit's going to be fucking sexy. I'm getting excited here.
Bostic doesn't comment on rate outlook in the prepared text.
I'm getting excited. I'm getting bulled up. I'm like, not quite bulled up yet, but I'm getting bulled up. I'm getting excited here. On a 1 minute basis, I'm like, oh man, here we go.
Do you want to stay up to date with the latest and be on the bleeding edge of news for...
You should be wrapping up your bearishness. If you're bearish here, you should be like, Cap, if I was a 10 on the open, I'm like a 1 right now. So I want to tell you this. If you're a bear, you should be like, your bearishness should be going away right now. You should be looking for a reversal to the upside, either here or down here. And if you're a bull, you should be starting to get bulled up right now. Just starting. Like, I'm starting to get bulled up here. If you're not getting bulled up here, and if your bearishness isn't leaving, I guarantee you're a losing trader. 100% chance. I 100% guarantee that you are a loser. I guarantee it. Guarantee that you do not end the year green. 100%. Because I'm getting bullish. I'm not bullish yet, but I'm almost there. I'm like almost like... I'm pretty fucking bulled up here. Like, I'm getting there. And the closer we get to 4 o'clock, the more bulled up I'm going to get. Think about that right now, what I just said to you. If you're bared up right now, like you're like full bear, you're on the wrong side. If you're sorry, am I saying that wrong? If you're fully bared up right now, you are in the wrong. If you are fully or not bulled up at all, you're in the wrong too. So if you're a bull, how should I say it? If you're like I'm saying this wrong. So if you're a bull, right, and you're not feeling bullish right now, you have something fundamentally wrong with you. If you're a bear and you are like just getting bearish, you're something fundamentally wrong with you too. You can look right down here. You look right down here, and I can tell you why you're a fucking loser. I'm going to tell you why you're a fucking loser? I'll show you right now. I'll tell you why you're a fucking loser. Because you were a fucking loser here, and you were a fucking loser here, and you're a fucking loser here, and you're a fucking loser here. And you're about to become a fucking loser again right there. Do you understand what I'm saying now?
Warns that China is providing Russia with drone and
missile
components.
Fucking loser, fucking loser, fucking loser, fucking loser, fucking loser. Sorry to say fuck so many times, but I got to make a point to you. You ever notice like bulls get bulled up? Whoop. You ever notice that bulls get bulled up here? Bulls are up here. They're like, I'm fucking bulled up, bro. I'm 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 bulled up. Guess what? Those fucking bulls are losers too. Fucking loser. Fucking loser. Fucking loser. Fucking loser. Fucking loser. Fucking loser. And I don't mean a loser like you suck.
NYMEX
or like you're a fucking loser. Like that guy's a fucking loser. I mean, like you're a fucking loser. Like you're losing all your fucking money. So when we're right here, right now, check your ass at home and think to yourself: are you bullish or bearish here?
And NYMEX WTI crude may...
I'm not calling you a fucking loser. I'm telling you for a fucking fact that I know you're a fucking loser.
4 cents or 0.75%.
You're getting fucking smoked. Don't get smoked. I want you to be a fucking winner. So somewhere down in here, You should be looking for a turnaround. I'm a fucking loser. So somewhere down in here, right, you got a DCA down here. You got a DCA down here. You got some stops for being bulled up right here. Right? And you just start getting ready to fucking look for a turn. You understand what I'm saying? You got to look for a turn. And I want to tell you one last thing on this. If you want to stay long here, you could be a buyer here. You can DCA and DCA, or you can get stopped out. I want to tell you something very important. You'll see me do this on the show. When I try to catch a bottom, you'll see me go, okay, I'm long. You'll see me get stopped out. You'll see people in the chat say to me, I'll tell you exactly what happened. I'm going to tell you exactly what happens in the chat. This is how the chat goes. I'm going to show you how the chat goes. I'm bulled up. Trade goes against me. I get stopped out. God damn it, I just got stopped out. Okay, I'm long again. God damn it, trade just went against me. Just got stopped out. The chat immediately says, the chat goes, Captain, just stop trying to buy the dip. That's not how you do it. When you're trying to time a bottom down here, right, you have to enter, maybe get out. Sometimes it goes straight up. Whoop, yeah, you look like a rock star. I picked the first bottom. Woo! But you have to get aggressive. Like, you have to put risk on. I'm trying this bottom. No, I'll try the next one. I'll try the next one. And then if that's the right one, I'm going to go in with size, right? I'm going to start going from like 10 contracts, 20 contracts, 30 contracts, 40, 50, 100, 200, 300. If it winds up being this bottom one down here, by the time I get it right the third try without losing any money, without losing a dollar, not a fucking dollar, I grabbed the bottom. I didn't get left behind. And in 2 weeks or a week or price, whatever, I'm laughing away at the bank. Thank you for my 100 grand. Cost me a few grand to get there. Gambled for a few days on 0 dates. But I'm the one who's paying the bills. I'm the one sitting there with the car and the kids and the wife or whatever it is you like. The pile of cocaine, the Lamborghini, all that kind of shit. My private jet. Because you're down there hammering knowing you're close. So, anyways, I'm not trying to call you a loser. I'm just saying to think in your brain here. Like, it's counterintuitive. Your fucking brain is going to you. Like, your brain is like, oh, dude, I'm so bullish, but it's a top. Then your brain is telling you, oh, shit, I'm really fucking bearish here, but it's a bottom. You're a bear, and you're like, I'm getting all bared up right now, but it's a bottom. Oh, man, oh, my God, look at how high it's going. You should have been selling, right? So it's like everything about the stock market is the opposite of what you think. Everything is the opposite of what your brain tells you. The opposite, literally. Every time you're fucking bulled up, you should be bared. When you're bared up, you should be bulled. When the fucking people are telling you that a rate cut is good for the market, they're wrong. It's bad for the market. You know what I'm saying? It's the opposite. They're not going to fucking tell you what you should be doing. They're not going to tell you the truth. No one's there to help you. Jamie Dimon's not there to help you. He wants your money. You didn't know that? He wants your fucking money. When we're selling, why do people go on CNBC to tell you that stocks are going to be 10-year lows, that they're never coming back? Why? Think about that in your brain. Open the brain up and think about it. Because your emotions are high right now. Because if I tell you stocks are going to be in the shitter for 10 years while we're selling on a day, you're going to listen to me, and I'm going to feed into your fears. When we're on highs, let's say Bitcoin's trading 80,000, and I'm just watching these calls right now. I'm not in them, but I'm trying to buy them. When we're on a high, when Tesla's trading 1,500, that's when Pomp comes out and says, it's going to 3,000. It's fucking awesome. Woo! And you're like, yeah, dude, I love you, pump. And what happens the next day? They sell that fucker down to the dumpster, right? So it's the opposite. If some Tesla bulls out there and we're trading 1,500 and he's on CNBC like fucking got the flags out and he's got the fucking fireworks going, sell. Yeah, exactly. Agreed, Dr. Gon. Yeah, dude, CNBC is like always after, never before. I got a bid in now for some calls, but I think I might take it off. This looks like it's going to roll, so. Well, no, if you're trying to, and here's the other part. Let's get back to the other part of this. That's a good question. Who just said that? I don't know who said that. So someone just said, I only get 3 chances a week. That's a great statement. Hold on one second here. It's a good point. So if you only get 3 chances a week, good. Whoever said that, good job. So if you just said, I only get 3 chances a week, you don't have a trade. Now, this should go higher, but that was a great, whoever said that, good job. I'm like, who said that? He's like, oh, shit, I'm out of here. Okay, so if you only have 3 trades a week, you have no trade. You have to wait. You have to wait for this to bottom. You have to actually wait for all of this to happen. You can't take any of that. You have to wait for this right here. That's where you take the trade right there. You got to wait. You got to wait till we get back to this 515, 516. You will get cut the fuck up all in here. So you have no trade. You're a swing trader. That's what you are. You're a swing trader. You ain't got no trade. You don't have a trade. This is your best trade right here. That's your best trade. That's a very good question. If you are, what do they call it? I forget now what day is what it's called. If you're a PDA, I was gonna make a joke, but I shouldn't make the joke. You know, it sounds. I should make it's a race or not racist, like racy joke. It's like a sexual joke. You don't have a trade if you're under like a hold on a second here. Whoop, right there. Put those back where they were. Green. Nope, I don't want to do that. Throw that in the trash. Yeah, you've got no trade if you're under PDT. If you got PDTs, you can't take like 3 trades trying to find a bottom on a reversal. If you're a pattern day trader shit, you can't be like entering, exiting, trying to find a dip to buy. It ain't gonna happen. You're gonna get your. Well, I guess it could. I don't know if you can do this or not. I was told that you used to be able to do it on Tasty years ago. You could get a pattern day trader and then move it to another Tasty account, but I've been told recently that's not true anymore. You can't do that like you used to be able to do it. You used to be able to open up like 10 accounts on Tasty Trade, and you could transfer money from account to account. But I don't know that you can do that anymore. People have told me you can't do that any longer. Yeah, I don't know if you can do. Can you do that anymore, short seller, or no? Is that still? Someone's told me you can't. I don't know if that's true or not. By the way, how are you doing, short seller? You can on a cash account. Okay. I don't know if you can or can't anymore. Someone told me you couldn't. Not intra-firm. Okay, so you have to do them in separate firms. You used to be able to. You used to be able to go to Tasty and make like fucking 10 accounts. Like 10 cash accounts, and you could go from account to account, but they changed the rules or something.
1 cent or 0.79%.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Change to a cash account. You can trade with settled funds. I remember ghetto spreads. I haven't. Tell me about ghetto spreads. I used to know what those were. I don't remember anymore. You can't trade options with a cash account. Where can't you do that? I don't think that's true everywhere. I think you guys are talking about specific brokerages. Some of what you guys are saying, I don't know if that's true or not. Yeah, I think so too. I think you guys might be talking about specific brokers. Oh, the ghetto spread is a PDT hack. Doesn't Robinhood have something where you have to close zero or options that are expiring that day, even if you own them for a week or two? You have to 2:30 in the afternoon or something like that.
End of the year.
Yeah, you can't sell options on a cash account. You cannot.
Bostic says, I am not in a hurry to cut interest rates.
Oh, you're just selling in it. Yeah, I forgot about the ghetto spread. I haven't heard that term in a long time. It's been like 5 fucking years since I've heard that shit. They auto close them. God damn. I gotta, dude. When we trade this Robinhood account, I gotta remember that shit. I will not remember that. That shit's gonna fuck us. By the way, maybe we should open the account on Webull and just say fuck it. Let's get everybody off Robinhood. Maybe we just say fuck Robinhood and do it on Webull. Can you open a spread on Robinhood in a cash account? They do auto selling too? Are you shitting me? There's a lot of information coming across in front of me right now. Look at JT's got a hack. Look at what JT just set up there. FX Retracer's like, FX Retracer might have to fucking manage the Robinhood account. That's like box trading, right? Box spreads. The ultimate hack. You guys remember the box trade shit with Robinhood? You can trade basic credit debit spreads in a cash account. Do you guys remember box trading? Box spreads? Infinite money glitch? Wasn't that the original infinite money glitch? I can't remember. Yeah, dude, that was a long time ago. Do you remember that shit? So when they say infinite money glitch, that's what they were referring to. That's where that term came from.
Fedspeak says,
damn, FX Retrace says never had a PDT in 8 years. Right on, brother. On Webull, you need 2K to open it, so I didn't know that either. There's a whole bunch of stuff you guys are telling me that I didn't know. I remember, like, Webull, I remember when Webull first came out, they didn't even have level 2 or 3, did they? I don't think Robinhood had level 3 or level 4 for a while, right? I don't even know if they have level. Can you manage one side of a trade on Webull or Robinhood? If I opened up a simple spread, could I close one side, not the other, or no? If I opened up like a call spread or something and wanted to close a leg, could I do that or no? If you guys had the... All right, let me ask you a better question. If you were a new trader and you were trying to move a new trader off of Robinhood, what would your recommendation be outside of Webull? So you have to open them separately in Robinhood. All right, how about that? Hold on, time out. I might have asked the question wrong. If I was a new trader and I started on Robinhood and then I jumped to Webull, what would be the next brokerage you would recommend? Fidelity 100%? Okay. Fidelity, okay. Thinkorswim is man, like Thinkorswim is a huge jump for most of these guys. There's no fucking way Thinkorswim is easy for people. No, but the Thinkorswim, so Thinkorswim has a feature about it. They want you inside of their garden. Tasty is the same way. Tasty and Thinkorswim are garden brokerages. That means that when you begin to trade on Thinkorswim, they want you down the rabbit hole 24 hours a day. Thinkorswim Mobile is good? Yeah. Okay. I'm thinking about the progression for you guys are all been trading for a while. I'm thinking about somebody that's like brand new. Keep it classy. Yeah, that's what I was thinking. So I was wondering if the next step from Webull was TradingView. That's what I was thinking. Whoever said that there, I was thinking maybe we don't do Robinhood or Webull, but we do TradingView. I'll look into TradingView. Yeah, so like I have a Thinkorswim account, and anything I set up on Thinkorswim is like a 4-hour fucking process. And then I've had shit break. Like I do my market and volume profile charts. I come back in 3 months and they're fucking broken, or I hit the wrong button and I deleted it or something. I'm like, oh fuck, here's another 2 hours setting this shit up. TradingView is only futures. I did not know that. Yeah, I was wondering if you could connect TradingView to a cash account that you could trade options all day long till 4:15. All right, I'm gonna have to look into this. I'm gonna have to do some more research here. I'll post a question in the Discord and see what people say. I like TradeStation. I like TradeStation, TraderAid. I like Lightspeed. I like there's a few others out there. I like Bookmap too. Maybe you know what? Maybe I'll reach out to Bookmap. How about I reach out to Bookmap? Oh, they've got no option chain? What? Get the fuck out of here. Well, hey, welcome, Portland. Let me maybe I'll reach out to I reached out to the Bookmap guys a while ago. Then they reached back out to me, and the founder reached out to me. Maybe I'll reach out to them, and I'll see if there's something with us. I love IB. I love IB. That's another one that I like. I like interactive brokers. Let me reach out to Bookmap and see what they say. Maybe they'll help us out along the way or something. All right. I'll do some work over the weekend. I'm going to reach out to a couple guys and see if there's a way to maybe we can get David AMS to help us. You going to second Webull? Okay. But no kidding, huh? I read that, Winky. You guys are giving some good information in the chat right now. Who has the best charts? You want to know the truth? So in the early 2000s, right? Early to mid 2000s, there were some really good up and coming charting companies. And what happened was TradingView created their own language to write code for indicators. So they blew a lot of those companies out of the water, but there are better companies than TradingView, believe it or not. The charts are hard to beat. There are some problems with them, though. They're still limited. There are other companies where you can build better shit. TC 2000 has the best charts. Yeah, I guess we got to do some talking about this. Yeah, Pine is too basic. 100%. 100% on that. Pine is too basic. That's right. Pine script is a pain in the ass. It's bullshit. It's Pine script is great when you first learn it, and then once you delve into it, it's kind of bullshit. Nah, I disagree. And the other thing too is the way. So what they're doing is what a lot of so TradingView is down a path right now of what other companies are doing. Close gardens. It's a matter of more of closing the garden than it is opening it. Yeah, you're not seeing it, but it's there. Well, so just so you guys know, we are in development to develop our own charts for you guys. But that's going to be some time. There are a bunch of other data providers and chart and language providers for charting that we've looked. We actually went down the rabbit hole on creating our own charts fucking 5 or 6 times over a year. It's very costly. The data is like 30 fucking grand a month and shit like that. But we've tried everything at this point. Yeah, dudes, that's really happening. We're doing that. We are fucking doing that shit. Multiple languages. You need different languages for the presentation, for the chart, and then for inside the chart. Oh, dude, Winky, we got way into it afterwards, brother. We've been buying data, different data plans, different charting providers, like code providers for the code for the. It's all fucked up, but. Some Python can be good, but it's limited. We use Python. Python can look like shit too, though. That's where the ease of use of PineScript comes in. There's a bunch of other stuff here too, like the data cost for AWS is a factor in the background. Like, there's like issues with the data costs, and there's a bunch of other issues associated with all this stuff too. How many people are accessing it? Where are they accessing it from? Is it something from your site, their site? Where's the data coming in? How many times is the data accessed? There's like all kinds of mechanical things in the back. The pipeline in the background is the problem. Oh, really? If you'd like to help, okay. Reach out to me via DM, please. Well, I agree with that. That's where agreed, Winky. Totally agreed. Totally agreed, Winky. 100%, dude. PineScript is like ease of use. Ease of use, 100%. I need a developer. You guys ready? What I'm looking for right now? Actively looking for a I'm looking for a front-end developer right now. I'm looking for a tool developer with a financial background. I'm looking for somebody to build some I have 4 different jobs going out right now. They're going out, I think, this weekend. You're just a tool?
Biden says his message to Iran is don't.
I have some. If any of you guys work front or back end development,
Biden
and you're interested in helping and getting paid
of Israel and Iran succeed
to do the work, reach out to me via DM and just say, this is my experience. I have to say something to you, though, before you reach out to me. I am unwilling at this point for you to learn on the job. I have to say that. I have pissed away too much time and money on people saying they can do things that they cannot. And I don't want to be angry anymore, and I don't want other people getting angry anymore. And So I'm at a point where I need people that have done these things before to help me. I need you to be able to understand gamma architecture, gamma modeling, vol curves. I need you to understand how to pull data for modeling that may not be just like calls and puts in Greeks. So if you can do that, if you have that experience, let me know. I can't do it anymore. I don't want to get mad anymore. I don't like. You know what really upsets me is that and that doesn't upset me like I'm angry. What upsets me is I put out a request, right? And someone will say, I know how to do that. Okay. So I take them on a contract basis and they can't deliver. And I'm not mad at them. I'm just mad that it's not done or that they thought they could do it and they couldn't and the time passes. How many times have we put launch clocks up on the website? We never launched. Can you produce this? Yes. 3 months later, not produced, broken, doesn't work. Doesn't look anything like we wanted in the front end. So I'm just like, what do I do here? I don't know, man. AI is bullshit. It's kind of bullshit. Anything AI spits out is broken. You have to fix it every time. TC 2000. Yeah, and I feel bad because I'm not mad at these people. I just like, some guys are like, well, here it is, it's done. And I'm like, that's not done and it doesn't work and it's not what I asked for. And then they're like, well, pay me. I'm like, I can't pay you. I didn't ask you to build me something I didn't say build me something that doesn't work and I'm going to pay you for it. Like, you have to fucking be able to build it. I didn't ask you to learn on the job either, right? I didn't like say, can you build this? And you said to me, well, I can learn how to do it. That's not what I asked for. Yeah, that's Bob in the basement, dude. I wrote it down. I'll check it out. Yeah, Bob Kendall's probably been through the same shit. It's not easy. I'm not saying it's easy either. I'm not professing like, hey, what I'm asking you to build is easy, or that it's going to be easy, or that my expectations aren't high. But don't tell me you can if you can't. At this point, I can't do it anymore. I'm fucking done. Oh, you guys want some music? Yeah, I think that's it, Winky. Just be honest about your capabilities. That's all it is. It's that simple. I've built this before. I know how to build these things. It's that simple. Yep, I need a back-end engineer for the pipeline, 100%. Yeah. If any of you out there are listening in and you understand what I'm saying, or have any experience building these things, let me know. Hit me up in a DM. I will seriously talk to you. I get that too. I guess what I mean is, do you have experience? Like, if I were to ask you today, right? Like, do you have experience building GEX models? You should say yes. I have built them in the past. I understand learning things in the job. I have a developer. We have a developer here on staff. We have a developer here on staff. That's Bork. He's from, I shouldn't say this, but he's from Blizzard. He's an OG Blizzard guy. So he learns on the job all the time, and he says the same stuff. Like, this is my experience. This is what I know how to do. This is what I don't know how to do. I'm going to have to learn how to do this and that and all that other stuff. That's one thing. I'm talking about asking you to build me a fucking tool on Upwork, and you're like portraying yourself as being the best guy at this one thing, and you're not. I'm not talking about hiring it out of the country. I'm talking about like an American sitting there saying, I am the fucking guy. I've built these things in the past, and then they wind up having not done that in the past. AI coding sucks. Bad. It's okay. It's okay. It's like 70% of what you need, and then you have to go back through and fix it all. And a lot of it is generic. Like, I'm not looking for generic.
And says he expects an attack on Israel sooner, not later.
It's like, I'm not looking to build an RSI indicator. If I was looking to build an RSI indicator, shouldn't be doing what I'm doing, so. All right, I'll bring on the music. Here we go. All right, number one, I want to say thank you to all of you for being here this week. Number two, all the mods, the admins, the mentors. Number three, John L. specifically has been kicking ass in the Discord. I want to thank all of you for supporting what we do here. I want to make sure that you know that we are switching to an alpha phase in the website. TradeTheTrigger.com in the next coming weeks has some improvements coming. Look forward to those things. What else? We've got more shit coming your way, is my point to you. Very soon, actually. What else I want to say to you guys? I'll see you guys on Monday. We need to talk about some vacations this spring and summer, right? We've got Memorial Day coming up, 4th of July coming up. What else do we have to talk about? I think that's it. I want you guys to have a good weekend. Get off the computers. I'm going to give you a brief what to expect next week or into Monday before we close the day out, so that you guys have some expectations for next week. So give me just one quick second. We're going to set up. We're going to end up setting up what to expect next week for you on the market, at least on SPY, so that what? So that you guys can see what to be looking for. So hold on real quick. 30 minutes. Trigger screen. Okay. So from now into the close and into Monday, let me just get rid of all this stuff. From now into the close into Monday, this is your expectation for next week. I'm gonna mute a bunch of this stuff here so you can take a snip of it at home. So from now into next week, into Monday, this is your expectation, okay? You'll get a brief from me with a bunch of other crap over the weekend, of course. Let me look up one quick thing here, okay? I want to make sure I'm not fucking this up, because I haven't had a look at the market yet. I have not had a look at the market yet for the weekend. So, but when I come to you on Sunday, I have spent 3 or 4 hours looking at what to expect. So bear with me here. This is in 5 minutes. Okay. So, you're not going to want to hear this, okay? You're not going to want to hear this. Yeah, mute that for a minute. Mute that, mute that. Okay. So without doing too much due diligence, we are nearing a liquidation moment in the stock market. We are not there at the moment, but we are going to get there quickly. The market will liquidate below this here. The market will begin a liquidation stage. Then we will begin a correction, okay? Now, between now and Monday, I do expect a trade just like this into Monday, okay? Market breadth, if you know what that means, we can go as low on a scale of 100 to 0. Listen closely out there. We can go, right now we're at about 30. Okay, we should come up here and break lower and begin a liquidation phase. This is where you see sectors go to 0, 5, 6, 10, all that kind of stuff, and make our way lower to 495. Now, it being Friday, I don't think that you wake up on Monday morning and we are like, blood and way down. We're dooming it, all this kind of bullshit down here on Monday morning. I'm not expecting that on Monday morning at all. I am expecting a trade higher into Monday to confirm that liquidation break. And we will be sell the rip when that happens. This is going to confirm sell the rip, and we will begin a trade down, liquidating the marketplace. Currently, market breadth sits on most sectors at 30, the number 30 or 30% of 100. We do not trigger the liquidation break unless we get down to 20. So for right now, that's not happened. We're not there. We've only come down to most of this trade being gone. So I am going to expect these buyers to show up and give one more buy here to close the door for bulls. Once that door is closed, you're going to see the daily trigger begin to roll. You will see this step down on Monday, Tuesday, Wednesday, and Thursday, and you will see the rejection and the trade-off of the hourly trigger, and we will begin to liquidate the marketplace. We are not there yet, but we will get there by Monday, okay? Now, we are going to monitor this into Monday. There is some material risk to the marketplace, and that is the possible geopolitical risks if Iran does anything. So if Iran pulls any bullshit over the weekend, you could see a bloodbath over the weekend. Sunday, Monday, we actually do liquidate the marketplace. So I would recommend some cheap puts into Monday on the closing bell or even right now, like 5 or 10 cent puts with a target of $4.95 on SPY. I don't know what they cost right now, and I don't know that I'd buy them at this particular moment because it's probably the worst moment to buy them, but maybe at like 4:15 p.m. or something like that. You buy them for Monday as protection against the marketplace. Another thing you could do is place a putback spread in case we do squeeze higher. If those tensions go away, and you'll still be flat or making 5%. So expectations into Monday currently. This is your trade into Monday. When we get in on Monday here, I am going to expect that we are going to begin a correction on Monday, but not today. Not today. I'll be getting all crazy here today. So here is your expectations for Monday without doing any due diligence, except for market breadth. Right there. If you want to snap that at home, you can. If you are a supporter or a pro trader, you'll get a more detailed summary on Sunday night. I want you to see something else right now before you go for the day. Give me one quick second. I'm going to show you what the catalyst is going to be. Give me one quick second here. Hang tight. Come on now, load for me. Come on, load for me. Come on, load. I'm having problems getting this to load. All right, you're not going to get this from me. As soon as we break below here, we are going to trigger CTA selling. And it is going to get nasty below this level. So anything below 504.61, any rejection below, I should say, 506.61, anything like this, we are going to trigger systematic selling inside of the marketplace. And it's going to get violent below here. So we're going to position forward on Monday. Right now, as we come into this close, I'm going to be buying calls for Monday. And then when we come into Monday, I'm going to be looking for some protection. If you wanted to take a trade into Monday, you could put some 0 or 1 dates on for Monday here, or Wednesday calls, and also hedge yourself with cheap doom puts for later next week, Wednesday or Friday, 4.95 Ps. They're a little pricey right now. They're 70 cents. I might go against that. The cheapest thing for you to do is to stay flat. That's the cheap way to do it. I gotta pee. Currently 3:19 in the morning, in the afternoon. Oh, wait a minute. Hold on here. I gotta do something. Trigger full screen, and I'm gonna unmute the chat box. Sorry about that. I lost the chat because I muted it somewhere else. So, expect a squeeze higher into Monday. Matter of fact, I'm going to buy them right now. Hold on a second. All right, so I got some calls for Monday. I've got 516 Cs for Monday right now. Now I'm sweating. I'm leaving them on until Monday as well. I'm going to try to exit on Monday. Well, not try to exit. I'm going to see what happens on Monday, what the reaction is on Monday. If we get above the hourly trigger, I'll leave them on. But I'm still in those calls, and I'm going to stay in these calls until Monday, or we go up into the close here. So either we go up there now, or we're going to go up there on Monday, and then I'll exit the market. Now, I do warn you of something here. There is systematic risk to the marketplace due to Iran making threats of, I don't know what they're going to do, throw sticks and rocks or something. I know you guys think Iran is like a big bunch of badasses, but I don't think they're as bad as you think that they are. So you either have to be, you need to either hedge yourself appropriately. Put back spreads are a good way to do that. Some 1 date puts for Monday morning is another nice way to do that. Very simple, cheap, easy to do. 4.95 is 4.95 puts are 16 cents for Monday. Those are cheap. $500 puts for Monday are 36 cents. Those are cheap as fuck too. Yeah, I have to say this as a disclaimer. I don't want anybody to come back on Monday and being like, "Oh, Cap, they did a terrorist attack over in Wichita, and you didn't tell me that. You should have known that." So I gotta do this to protect myself from you guys, you bunch of savages out there. I quickly looked at market breadth. The sectors are down to about 30 right now, 35, 36. Markets are still safe right now from liquidation, but if we get below 30 and hit 20, it's gonna trigger a liquidation event. So be aware of that. CTA positioning is about to trigger. It hasn't yet, but it's about to trigger. That would create the momentum to the downside that we're looking for, although we're not quite there just yet. And let's play some music for the Bears today. Hold on one second. Let's put some music on. You got to give it to the Bears, dude. You just literally traded the market for since October. October, November, December, January, February, March, April. 7 straight months of up. Give a bear a day. Give him a day. Seriously, give a bear a day. Let him prance around and get all awesome and all that kind of fun stuff. I warned you last night in the market brief that this could happen this morning, and it did. So we're given fair warning. Just let them have their day, baby. Let them have their day. Hold on one second. We'll get all bared up here. Hold on. We got to play the classic first. We got to play the classic. Is this thing even playing? Oh, my audio's all fucked up again. You kidding me? You got to be kidding me. Seriously? My audio's all jacked up again. Ugh. I can't play music. Oh, can you guys hear it? Can you guys hear music on your end or not? Check 1, 2. Can you guys hear music or no? No music? Okay. I'm still having music issues here. Can you hear music now? Let's start at the beginning. The Microsoft updates are doing me dirty here. Yeah, I can't hear shit on my end. Track 1, 2. That's so stupid. Streamlabs did an update last night too. I can't hear nothing. I can hear it now. I can hear it now, babies. I gotcha. Bears taking it the whole week, baby. That was pretty good. I could hear that. I could hear it that time.
She said he was calling my name. She was naked up against the bed frame. It's a safe bet. This will happen again. So walk away now. Don't back down. You're better without. No longer sacred. Your place is in danger. Sorry you face this. Seems like 'cause these spaces being desirable number one. All I wanna do is have a little fun. Just look at you under the thumb. It's all too much. I have to run. Dangerous.
Sorry, I've been some calls for Monday, and I don't want to get blasted down here. They're going to try to blast me here. I got some stops on here in case they try blasting me down to the depths of hell down here. HYG just mooning right now, and Spoo's just being pinned.
Reassurance doesn't hit right now. I'm not fucking with your guy. You seem unbreakable from the outside. No longer sacred. Your place is in danger. Sorry, I said things that left a bad taste. Yeah, I really want to get along. 'Cause your boy's best friend is a one-on-one. I didn't mean to cross the hump. It's all too much. I have to run. Dangerous. Caught in the scandal.
One other programming note. We have a famous trader that's going to be doing an interview with us. I'm not going to tell you his name at the moment. I want to confirm that he's coming on. He's tentatively said yes to an interview. It's going to blow your mind when you see who it is. Doom. I'm catching some call premium right now. Just a heads up out there. I got call premium kicking out on calls for Monday. Don't reverse. Oh, again, a nice call kick right now. Let's see what this half-hour bar is, if they're going to sell this shit down in the depths of hell or not. 332 right now.
Some form of control still, making our constant binary choices and voicing our equally shallow opinions more loudly or quietly. Most people can't even decide what color to wear or which burger to eat. What does it matter, man? Autonomy is an illusion.
First trade of the day for me. On 5/16Cs.
Autonomy is an illusion. Autonomy is an illusion. Most people can't even decide what color to wear or which burger to eat. What does it matter, man? Autonomy is an illusion. Autonomy is an illusion.
Calls are holding up fine right now. Calls are good. They're not just like slamming them right now, so someone's out there buying calls.
is the future. Evolution. This is the future.
One more penny, they take me out.
Evolution.
Still in. Still holding on. That's it. I'm out. They just took my stop just there. That tick right there. They just took my stop. Out. Did I get back in or no?
This is the future. Human error.
Lined it up, but haven't taken the trade yet.
Evolution.
They try to run this shit down on the bell, and I'm gonna have to wait.
This is the future. Evolution.
Flat right now, just waiting. God damn it. Oh, you fucking slut. Sorry. Shit. Should have sworn. Motherfuckers. Oh. I'm flat right now. I didn't lose any money, but I mean, they're up 46 fucking cents right now. Fucking motherfucker. I'm gonna start swearing. I'm not buying them. I'm not buying 47. I want 42. That's a 20% of the trade right there. I ain't fucking doing it. Son of a bitch, dude. They took my fucking... every time I tell you what my stops are, this is what happens. I'm fucking furious. Saying shit now. I ain't even telling you if I'm in or not. Now I'm not saying a goddamn word in this stream to any of you. I'm back in again. Fuck them. I'm so pissed right now. Now I'm just gonna hold until 4:15. They can get fucked. Long again, 516Cs, no stops, no gas, no brake, all gas, no brakes. Fucking cocksuckers. Sorry, fucking motherfuckers. They took my goddamn juice, 20% of my juice. I'm revenge trading. Every fucking time I say I've got stops. Did I tell you where they are? They come down and take it by the fucking penny. I swear to fuck, some assholes out there watching. He's going slam, slam, slam. Fuckers. Pissed, sorry. I'm long. I'm long to the close. They can eat my dick all day long. I'm making money today. You can lick my fucking balls if you're out there watching and you're in a hedge fund. Suck my dick. I'm getting paid. I'm angry and happy. I'm hangry. No, I'm hangry. Jesus Christ. Hope you had a great week this week. Hope you had made money this week. It was a good week. Overall, it was a great week. Everybody's getting paid. Bulls, Bears. Hope you're long here. I hope you're going to put a hedge on over the weekend that you wait until the end of the day. They literally took my 20, not 20, I was like 8 cents or something. It was like 42 to 49-ish. Got stopped out on 42, went back in at 40-fucking-9 instead. So now they got like a 20% buffer on me. These fucking goddamn fucking order flow fucking. It's Friday, you're right. Should have stayed in the trade. Can't wait to see you guys on Monday. What do you got? Tell me in the chat what you're doing this weekend. Who's doing something cool this weekend? I haven't lost $1 today, dude. I'm like, fuck. What the fuck? You overtraded today. Overstayed. You're welcome. You're working. Boo. That sucks. CPA exam. Congratulations, Luca. Aquarium. Right on, Tazo. Oh, you're Raven. Right on. Right on. I've already told you my expectations for Monday. We come back and look at it on Monday. Hockey finals, right on. Ooh, crawfish boil, like that one. Watching the Red Bulls, baby. Porch, how are you doing, brother? Good to see you. I haven't seen you in a bit, brother. Good to see you. Go BC, baby. You're either a BU or a BC guy.
We have some form of control still, making our constant
Is anybody going to go see Civil War?
Opinions more loudly or quiet.
There you go. Make me some money.
Most people can't even decide.
I like the hotel pool. We do that with our kids.
Man, autonomy is an illusion.
Hold on here. Yeah, we always play it at the end. stock market is not closed. Not closed on Mondays. It better not be. I've got April 15th calls on right now. Yeah, Monday is last day for taxes. That's pretty good. Yeah, that last song was from Jimmy Fontanez. Yeah, we've already done our taxes. We're done with those. We start our taxes right at the beginning of the year. It takes us weeks. It sucks. I might go dancing tonight. I'm down for some dancing tonight. That's what I was thinking of doing. Go to there's like some bars in Detroit that have dancing, like party rave shit. I'm supposed to be going to a James Beard restaurant tonight. It's let me get the name of it. Hold on. And it's cheap. It's dirt cheap. I'm going to a place called Ima Azakaya. Ima Azakaya. I-M-A. That's where I'm going to eat tonight. Then my kids have I do have kind of like a weird weekend going on. My kids are doing something with they're into like K-pop and all that shit. So they get some kind of like K-pop shit going on, and I don't partake of that stuff. Well, I do, but they don't like me partaking of that stuff with them. So that's Saturday. So my kids will be away on Saturday. I don't know what I'm doing on Saturday. I haven't made any plans. I gotta come up with something to do. A bike ride would be nice, but it's gonna rain, and we're getting like 50-mile-an-hour winds here. All that storm that was down in Texas and down in Georgia is like meeting up and blasting up the middle of the country. Izakaya, yep, Izakaya. I don't think they're a James Beard winner. They were nominated last year or something. It's like Bork said it best. He said it's Japanese fusion small plate. Small plate Japanese fusion. Yeah, it should be good food. I mean, I've never eaten there, so I've never eaten there. It's a first for me. So I'll see how that goes. I don't know how that's gonna go. Plus, I'm like, if I'm gonna go dancing and eating sushi, I'm gonna be throwing up sushi everywhere. Let me I'm missing a song here. Hold on a second here. Dinner. Hold on here. Yeah. More Doom into the bell. Oh, I think we already played this one. I think that's all the Doom I got. I think I played all the Doom that we have. I don't have any more Doom right now. Bears living their best lives in 6 months. I love when you guys say that shit. 3:53, 7 minutes left. Someone had asked earlier in the stream about Monday, right? If you're gonna buy some puts, some put hedging for Monday, try to catch them when we're up here doing this shit, and buy them really cheap. There's no real point. We're likely going up. We've got earnings season starting. So if you want to get your bear on again, you want to be selling off the hourly trigger. Remember that. Sell off the... Listen to me closely, bears. You are a seller off of the hourly trigger. I don't know how many times I got to say that. You know what's weird? It's only the bears that say that to me. Never the bulls. I tell the bears, I'm like, you sell off the hourly trigger. They're like, you mean right here? Look, you mean sell right here? I'm like, no, dude, you don't sell right there. I'm like, you sell the hourly trigger. Whenever we come back to it, the half-hour trigger, you sell off of that, not the fucking bottom. Sell off the hourly trigger, bear. You mean right here? No, the hourly trigger. You sure not right here? The hourly trigger, dude. Cool weekend vibes. I don't have a lot of music here right now. I'm signing up for Pretzel. I'm supposed to get some good music. I'm supposed to get some good music come Monday. Let me see what I got here. Hold on. Let me see if I can find some good music. Hold on. Oopsie. No, it's not the 135 EMA. 135 EMA. A good one, though. Hold on a second here. Let's try this one. No, that's stupid. Let's try this one. Oof, that's rough. Nah. Play some like Tesla music or something. What are they doing with this music? The music's gotten worse and worse in this channel. Music's gotten worse and worse. Dude, seriously. Terrible music in this shit. That's not bad. Can you even hear this music? You can't even hear this music, can you? You guys can't hear this, can you? Can you hear any jams right now? I'm having some audio issues. Yeah, I'm having audio issues in the background. I'm having straight audio. I'm having some pretty bad audio issues here. So I had a Microsoft update. Then I got a I don't know what the fuck. There we go. They're back on again on a different channel. Audio channels are all fucked up. Dude, these beats aren't even matching. The beats are crashing on this stuff. What the fuck is going on? Yeah, I'm having real audio issues here. It's like yesterday I had a Microsoft update, then this morning Streamlabs was like, surprise, motherfucker. I'm like, oh shit, here we go. I'm like, okay. Screw all your settings again. Yeah, there was some crashing going on there. Addie, what are you doing this weekend? What are you doing this weekend, Daddy? If you want to know where to sell next, it's going to be 515. 515, you want to sell that number. Sell 515. Your son's game is a catcher, right on. I was a catcher too. JPM's going to bed down 6. That's not so bad though. I would like to buy JPM here. I'd like to buy him for the quarter. They should have two more good quarters. It was weird today because they were saying that because their guidance was saying they were looking bad for rates later in the year, but that's not until Q4, I think. Their Q2 and Q3 should be fine. They should make good money. Yeah, I played outfield, and then I played shortstop, and then I played catcher. I think I started out as a catcher in baseball when I was a kid. All right, 1 minute left. I'll be seeing all of you guys on Monday. If you are a supporter or pro trader, you're going to get an in-depth market brief on Sunday. After I go through the data, if there's any one warning, or not warning, but I will let you know this: if there is an event over the weekend, I will come on live with you and live stream with you if you want to talk in the Discord or something like that. So if there's anything really bad that happens, we will have a meet and greet, get together, and discuss what to expect. That kind of stuff. Only if something really bad happens in the United States, not in Israel. If it would have to happen in the United States or to a U.S. ship or something like that. But otherwise, sweet, making money. Make me some money. Yeah, so I'll be here with you in the weekend if something bad happens, if there's like a doom and gloom event or something like that. But if not, I won't be here until Sunday. Hey, thanks, great man. I appreciate it, brother. I'm making money right now today. I'm not red today. I'm happy. So at least I didn't lose any money, right? Wealth preservation, and then buy the dip. Yeah, I'll see all of you guys. I'll see you later, Hero. Addy, have a great weekend. Visionary, Green Man, B-Mix 26. Thank you. Appreciate that, brother. Harush, you have a great weekend. Good to see you. Stonks Anonymous, take it easy, brother. G Grabba, poke the juice box. A. Evans. Marmot Burr, baby. I love that name, by the way. I got to go potty so bad. I'm like wiggling in my chair. My leg is full of pee. Bubble Dot, have a great weekend. Jay Play Games, Stretching Walls, Nino, California. What up, Doe? Chopacujo. Anybody from Detroit? What up, Doe? Boat Rush. Have a great weekend. I'll try to stay safe. Dude, why are they squeezing and not paying me right now? The fuck is going on here? Oh, they're real assholes right now. They're squeezing us up and not paying options. I mean, fuck you. Seriously? They gave me a penny on that? Random, Lost Fun Zone, and Trippy. What up, Sack? Cannot be helped. Sacktown, baby, USA. Mr. Talking Monkey, take it easy. I'm like, really? We're squeezing right now and you're not paying me as we squeeze up? Luca, Knives Out, Porch. I'll see all of you guys on Monday. Binky, take it easy. I gotta close it down. All right, I gotta go. I gotta go potty. Thank you, Binky, for being my daddy. Have a good weekend, everybody. Later.